respected speaker for today's virtual CP seminar, CA Vivek, Sathyan from Varma, Ernakulam, Vice Chairman and Secretary, CA Suprasad Sir, immediate past Chairman, CA Jayaprakash, Treasurer of the branch, CA Dinesh Kumar, on the illustrious past Chairman of the Kannur branch, all my fellow members in the profession, friends, staff, and dear students, a very good afternoon to all of you. Today we are here with the third consecutive seminar on bank audit, now covering the IRCA on COVID-19 circulars issued by the Reserve Bank of India, and also the Supreme Court verdict on maintaining the status quo technology. As you all agree with me that one of the key areas in our bank audit is the verification of income recognition and asset classification. Even though in many banks, the asset classification and income recognition activities are fully system driven, still we have experienced a number of mistakes and differences in these areas. Means human interventions are still happening or still possible in the system to manipulate the NPA figure. So let us be more vigilant, and a blind dependency on the system will not save us from our responsibility in identifying and classifying NPA. And to enable us, we now discuss a young, vibrant cabinet accountant, Vivek Sathyan from Varma, Ernakulam. And I feel this is the second time he is coming as a speaker for the CP seminar of the Kannur branch. And I am sure that he will enlighten us about the IRCA norms, the COVID-19 circulars issued by the Reserve Bank. And he will also deliver upon the Supreme Court verdict, the recent verdict restricting the classification of loan accounts. Dear CA Vivek Sathyan, on behalf of the Kannur branch of the SIRC of ICAI, I extend a very warm welcome to you to this virtual CP seminar. Welcome you, sir.
Thank you so much, sir.
And I also take this opportunity to thank you for accepting our invitation in spite of all your busy schedules, because I am sure that this is March end and you are so busy. Still you accepted. Once again, thank you.
Pleasure is all mine, sir.
I also extend a very warm welcome to all the managing committee members, all the senior members of the profession, friends, staffs, and to my dear students. Members, please remember to fill and submit the Google form, which is already shared in our WhatsApp group to get the mandatory CP credit. Now I request CA Gerald Thomas FCA to formally introduce CA Vivek Sathyan to the audience. Please, Gerald.
Most respected Chairman of Kannur branch, CA Register, very eminent faculty of today's session, CA Vivek Sathyan from Cochin, very respected management committee members, CA Suprasad Sir, CA Dinesh Sir, CA Saju Sir, CA Jayaprakash Sir, senior members of profession, my dear colleagues, dear friends, students and staff. Today we are on third bank audit seminar. Very important seminar because of the special emphasis on this COVID-19 circulars and also this IRCA norms. Today, today's faculty is CA Vivek Sathyan from Cochin. His fellow member of institute, qualified in year 2008, partner at Varma Chartered Accountants. He cleared all stages of CA examination in the first attempt and also completed CISA examination. A well experienced in audit and assurance service of including audit of manufacturing companies, banks, hospitals, airport, non-banking finance companies. He has handled internal audits of various large corporates. He has handled many corporate tax assessments, including transfer pricing. He involved in statutory sum audit of various nationalized and private sector banks. He involved in IFC study of various nationalized and private sector banks. He is actively involved in tax assessments. He has handled various advisory and management services such as due diligence assignments, corporate business valuation and mergers and acquisition. He has presented various papers in seminars organized by ICAI and other professional organizations on audit and taxation. He is faculty of financial reporting and indirect taxes for CA Final. These few words of introduction, I welcome CA Vivek Sathyan sir from Cochin for the seminar. Over to you, sir.
Thank you,
Thank you.
Gerald. Thank you very much. Please back on this.
Second is focus on the recent COVID circulars that have come. And I'll start off with the IRAC norms. So before I start off with the IRAC, or to start off with the IRAC, it will be worthwhile to know the chronology of events that have happened post COVID-19. I will quickly take you through this, and after that, once more, we can understand what the relevance of these circulars are. But if you remember, it is in March 27, 2020 that initially, when the lockdown started, a moratorium was introduced. After that, further circulars came in. April 17, another circular came stating that moratorium, for whatever moratorium has been granted, those accounts will not be classified as NPA. May 23rd, what happened? That moratorium further got extended to 31st August 2020. May 23rd also, there were other facilities for which the extension, for example, pre-shipment, post-shipment also, the extension was given. Restructuring norms for MSME, personal and non-MSME, that was changed in August 6, 2020. Now, this is one of the COVID circulars that we'll be covering today. August 6, 2020, for the restructuring norm for MSME, personal loans and non-MSME loans were introduced. August 27, ex gratia payment for certain classes of borrowers were announced. This most of us are familiar, as you know, for smaller borrowers, most of us have benefited individually as well, where compound interest was refunded back. This is that ex gratia circular. 23rd March 2021 is an important date. It actually happens to be the same date where we are having the seminar. But today, why that date is important is because a very important Supreme Court decision has come today. A very, very important Supreme Court decision has been pronounced today, which will have a major impact on the bank audits. So what is announced? What is the impact? That is a suspense. I will not tell you right now. We will to stay on. So before I continue, my request is whoever can, please switch on your video. Some of you may be in your home and maybe in your casuals, it doesn't matter. But I rely on feedback a lot when I'm, taking my session. So it'll be grateful. I'll be grateful if you can switch on at least to the extent possible. I will not ask you too many questions, but it is just to get some feedback so that, I can understand to what extent I need to elaborate further, whether I need to increase my speed, reduce my speed, that will help me. So with that, I start off. So as I said, I'll quickly touch upon what are the types of advances. This is a basic fundamental concept. Before you know or understand IRAC or advanced audit, you should understand what are advances. For that, let us split into two. There are funded advances and non-funded advances. What is a funded advance? Funded advance means the amount is actually gone. For example, term loan, ODCC facility. These are facilities where bank has actually made the payments. Fund has gone from the bank to the borrower. So that is a funded advance. There are various types of funded advances. Why this is important is because the NPA norms will apply based on which type of loan it is. Unless you know what bucket to put those loans, you will not be able to properly classify it as NPA or otherwise. So for that, it is very important that you understand what are the different types of loans. So students who are attending this, please listen in carefully and understand what the different type of loans are. And members also, this will be an opportunity to brush up on the concepts. What is a term loan? Term loan, let's take a housing loan, most simple example. Housing loan is a term loan. Term loan is given for a period of time, for a term. The term can be, it is usually more than 3 years. Typically, or certainly more than 1 year, but typically more than 3 years. It is given for a specific purpose. What is a term loan? A term loan is given for a specific purpose. The second one. Then you have a fixed repayment. A fixed repayment can happen either through EMI system or it can happen by principal happening separately and interest only being collected. But whatever be the terms of the repayment, there it will be fixed in such a way that over the tenure of the loan, both principal and interest will get paid. It is normally secured by fixed assets or the asset which the term loan intends to finance. That normally will be the, for example, simple example is a housing loan. Housing loan, what will be the security? The house will be the security. It is secured by fixed asset or any other immovable property as the case may be. It is normally given for a specific purpose. This is a term loan. What is the other type of major type of loan? A cash credit. What is a cash credit? A cash credit is a running facility that is given. So sorry, before I continue, any doubt that any of you have, kindly interrupt me, feel free. It'll also make me feel that I'm not sitting alone and talking. So please, any doubts that anyone if you have, or any further clarifications, if I'm going too fast, just interrupt me, please. And whatever questions you have, we can discuss that further. So moving on, cash. What is a cash credit? So cash credit is a working capital facility. It is given to finance your working capital. Secondly, it is a short-term facility. It is normally given for 1 year. And cash credit, but though it is given for 1 year, what happens after 1 year? That is renewed. So all of us are familiar with cash credit. Cash credit is also sometimes called overdraft facility. So cash credit overdraft facility typically works as a working capital facility. It is a running facility. It is a short-term facility. It is repayable on demand, and it is primarily secured by inventory and receivables. So please listen in, because this part, unless you understand what each type of advances are, you will not be able to understand anything further. And there are certain finer things also. I'm sure all of you have heard these terms, but certain finer things also I'll try and take you through that. Cash credit is normally for a period of 1 year, and every year it is renewable. So the renewal process has to happen every year, and it is primarily secured by inventory and receivables. There are collateral securities also. Collateral security be movable property. That is how a cash credit facility is given. But typically understand that this is a running facility. The intention is it is a running facility. Now, certain other type of advances. One, agricultural loans. Agricultural loans normally are given like a term loan or a CC. It typically falls under these two. However, the IRAC norms. What is IRAC is RBI Income Recognition Asset Classification norms are different for an agricultural loan. For an agricultural loan, it is given for specified activities or certain other, whatever it is, it should be for agricultural activities. The basis it says it could be given for a short duration crop or a long duration crop. It could be given for a short duration or a long duration. This state level bank committee has defined what is a short duration crop, what is a long duration crop. It is important because it is on this basis that the IRAC norms have been specified. Export finance. What is export finance? Export finance, typically there are two different types of facility. One is a pre-shipment facility, another is a post-shipment facility. What is a pre-shipment facility? It happens before shipment. What is a post-shipment facility? It happens after shipment. So typically export finance here means that it is given for the purpose of financing your exports. So there are two processes there. One, before shipment happens, why would you require loans? Loans are required for procuring raw materials so that you can manufacture your goods and export it. Important thing to notice, a pre-shipment facility, how does it get closed? A pre-shipment facility will get closed by a post-shipment facility. A pre-shipment facility becomes a post-shipment facility. What is a post-shipment facility? Simple example is bill discounted. Bills purchased, bills discounted. So what happens? A borrower will get a loan. He will manufacture his goods. Then he will ship it out. Once he ships out, he will get an invoice. That invoice is what is called a bill. That bill can be discounted with the bank. And then what happens? That fund again comes to him and he closes the earlier loan. That is a pre-shipment loan. So the earlier pre-shipment loan is closed and that gets converted into a post-shipment loan. And then that post-shipment loan is then closed by the borrower. So I just quickly explain that once again. A pre-shipment loan is a loan which is given before shipment for manufacturing the items and making the shipment. Once the shipment happens, then it becomes a post-shipment facility. A pre-shipment facility becomes a post-shipment facility. Pre-shipment facility is commonly called a packing credit facility. So what you would have commonly heard of packing credit facility. This is what it is. This becomes a post-shipment, then it is a bills purchased or a bills discounted facility. What are the NPA norms for all of these things? I will get into that. Next category is a letter of credit and a bank guarantee. What is fundamentally different between all that I explained earlier and this? What is the fundamental difference between an export finance and a letter of credit or a bank guarantee? The fundamental difference is a letter of credit or a bank guarantee is an unfunded facility. That means it is like a contingent liability to the bank. It is like a guarantee which the borrower is giving. So what happens? Let's say I'm the borrower. I want to make a shipment abroad. When I'm making a shipment abroad, typically I want to make a purchase from outside. So my vendor will say, okay, I will give you the materials, but I require a guarantee. That guarantee is in the form of a letter of credit that the bank will issue. That right now, it is not a liability to the bank because it is only a unfunded facility. At this point in time, it is only an unfunded facility. It has not become funded. When does an unfunded facility become a funded facility? Not in the ordinary course. In the ordinary course, if the borrower is not defaulting, an unfunded facility will remain as an unfunded facility. However, the moment the borrower defaults, then the vendor, our supplier abroad, will call upon our bank and ask the bank to make the payment on behalf of me, the borrower. So an unfunded facility becomes a funded facility when the borrower does not pay. So bank guarantee, this is called bank guarantee getting invoked, or a letter of credit getting devolved. Letter of credit getting devolved means on the on the due date, the supplier will present it. The bank or the borrower, if the borrower does not make the payment, then the LC gets devolved. That means it becomes a funded facility. It will go into your normal ODCC account, and the ODCC account correspondingly will increase. So I hope this part is more or less clear. I mean, why I introduced type of advances is primarily for the benefit of any students who will be attending this. But again, if there's any further clarification that you will require, I'll be more than happy if you want me to explain further. Another thing I didn't fully cover is something called a demand loan. If you notice, everything else I've explained except for something called a demand loan. Now, what is a demand loan? A demand loan is a hybrid, is a little bit of a hybrid between both. A demand loan typically is given as a working capital facility, but it is given, a simple example I'll tell you, normally gold loans come out as a demand loan. So demand loan is given for a short period of time, certainly less than 3 years, normally for a period of 1 year. Within the period of 1 year, a bullet repayment has to be made and the full loan has to be closed. This is what is called a demand loan. A slight derivative of this is called a working capital demand loan. That means it is given for a period of 1 year. It is given as a working capital facility. At the end of 1 year, what has to happen is that is either closed or else it has to be rolled over. So this is how a demand loan works. So I think this part of it, I think more or less is clear, I hope. I'll move on to the conceptual part now. This is of paramount importance, early detection of SMA. So again, for those who have just joined in, I'm trying to explain advances, and within advances, I've started off with income recognition and asset classification norms. In income recognition and asset classification norms, which is the most critical aspect of looking into advances, the most important aspect is NPA classification. When do you identify? How to identify a NPA account? NPA means, as we all know, a non-performing advance. So in that identification of NPA, what are the regulatory requirements? It is completely rule-based. Who decides what? So RBI has issued regulations which state when an account will become NPA. What are those regulations? So before I tell you the SMA part of it, I'll quickly tell you what those regulations are. That regulation is called the IRCA regulation. This first regulation, Master Circular on Income Recognition and Asset Classification. This is our Bible for bank audit. It is issued on, this is the one, 1st July 2015. The RBI's Master Circular on Income. If anyone of you is taking notes, especially the students, kindly note this is the date 1/7/2015 is the Master Circular. Now, if you're thinking what happened after this, the last circular is July 2015. What happened after that? After that, only master directions have come. But primarily, all that we need to know is in the RBI Master Circular dated 1/7/2015. So before doing a bank audit, we certainly have to fully cover the RBI Master Circular or on IRAC norms. All that, or 95% of whatever we are going to be covering in this session, in this PPT, it comes out of the RBI Master Circular dated 1/7/2015. What does it talk about? It talks about primarily when an account will become NPA and various other provisioning norms, things surrounding that. Income recognition, asset classification. Two aspects are there. One is income recognition. Second is asset classification. What is asset classification? You're classifying it as non-performing or performing. Now, having done that, what is the income corresponding to the performing and non-performing advance? what that is called income recognition. So IRAC means income recognition and asset classification. Sorry if this is going at a basic level now, but I'm sure we'll be able to pick up steam a little later. So these are the reference materials which we must read and must carry. Income recognition and asset classification norms. ICAI guidance note has come just a few days back. All of us, let us all ensure that we have a copy in our laptops. ICAI guidance note on bank audit. If you search it in Google, it will be readily available. It came, I think, on 20th March or so. Institute has come out with a detailed guidance note on bank audit. It carries everything. Master circular on IRAC, all the other circulars. In fact, everything that we need to know, everything that I can cover, everything that needs to be covered is all covered in the ICAI guidance note. It's a very voluminous document. It's an 800-page document. However, whatever you need to know, I hope once the session is over as well, I can highlight some relevant parts. So wherever we need to cover it, please ensure that the guidance note also we properly complete, we completely review and then start our audit. Then the other things are certain specific guidelines, certain specific regulations. During the course of our session, I'll highlight it, but I typically want to highlight the first two, and the rest of it, I think during the course of the presentation, we can cover. If there is anything, please feel free. I'll only be, I'm sorry for repeating this, but feel free to ask any questions at any point in time. Just unmute and fire away. So coming back to where I was, before an account turns into NPA, this is what it becomes. It's called a special mention account. SMA means special mention account. While doing a bank audit, now we have been allotted a branch audit. We are going to the branch. We are starting the audit. As I said, primarily the most important aspect within a branch is advances. And within advances, already the bank would have classified a lot of accounts as NPA. Now, what is our intention? We are starting to review the accounts. We are ensuring that the health is okay. The accounts are regular. There are no other credit appraisal is okay. Loan documentation is okay. All of the things matters concerning low advances when we are starting our verification. How do you select a sample? How do you select a sample? One, obviously based on major accounts. Major accounts you select based on 10%, 10 crores. I will cover that. In consultation with whoever is involved in the seniors in the audit, we can fix the sample size. But even beyond that, what are we required? Obviously 100% we cannot verify. So what percentage needs to be verified? How do we ensure that a potential NPA, we do not miss out? Bank is not classified, system is not classified. How do we find out? For this, early detection, SMA is extremely important. SMA means special mention accounts. RBI has mandated all banks to classify accounts which are in default as special mention accounts, out of which the large accounts above 5 crores have to be mandatorily reported to RBI as part of CRILIC reporting. So again, at the cost of repetition, SMA, special mention accounts, means accounts which are special mention, probably which are in default. There are signs of weaknesses in the account. So they're saying these accounts, you have to be careful. So this for the regulator, for the auditor, for the bank's internal review mechanism, for the branch, these are accounts which are closely monitored. Having done a branch audit, if you have not reviewed SMA, it will be a serious lapse. It will at least about 10 lakhs or 25 lakhs or 50 lakhs, whatever is set, depending on the size of the branch, fixing a limit. Certainly all special mention accounts should be covered. Now, special mention accounts are of 3 categories: SMA 0, SMA 1, SMA 2. What is this? SMA 0 means, so as I was earlier saying, SMA means it's a special mention account, an account where there is a default. Now, if that default exists for 1 to 30 days, simple example, my installment for February, my housing loan for Feb 2021, I have not paid. I was supposed to pay on 28th February 2021, I have not paid. Now, up till 31st March, the default is between 1 and 30 days. I was supposed to pay on March 1st, till March 30th, I have not paid. So the default exists from 1 to 30 days. That is called SMA 0. This housing loan, let us say in April also I do not pay. Then the default is March 1 month, April 2nd month. So the default is coming between 31 to 60 days. So this is a slightly more weaker account, SMA 1. SMA 2 is 61 to 90. This is very, very critical. This is just before it is turned NPA, 61 to 90 days. These are accounts certainly which are under severe stress. These are just on the verge of turning NPA. These accounts have to be mandatorily seen. Very, very important aspect which I would like to touch upon here is this SMA 0, 1, 2 list on which date should we ask the bank? SMA 0, SMA 1, SMA 2 list. On which date should we go and discuss, or should we go and take from the branch? Any thoughts on this? On which date should we go and get this list? Should we ask as on 31st March, or should we ask on an earlier date? You should earlier date. Why is that important? So I see, I think Najib is given some. So that why it is important is, if you take it as on 31st March, the bank would have somehow regularized this account. So if you take a SMA list as of 31st March, you are going to be looking at accounts where the default has been regularized. So SMA list as of 31st March will not be very fruitful. A better list to have is a SMA list as at 1st March 2021. So a SMA list as on March 2021, 1st March 2021, 1st March 2021, are all accounts which are under stress. Now, for these accounts, what we have to see is how it has been regularized. As at March 31st, the date is still not here, but as at March 31, 2021, if the account has been classified by the bank, then it's okay. Then we only have to see whether provisioning is adequate. But as at March 2021, if the SMA has been regularized, then it is very, very important that we see. As an auditor, why should I see? Clearly, the RBI IRAC norms also specifies solitary credits, year-end regularization has to be closely reviewed. Solitary credits or year-end regularization. In our case, around March 2021, where there are credits which are happening, year-end regularization which is happening, it is extremely important that we catch hold of such accounts. How we have to understand how these accounts have been regularized. Why is it important? Why is it important? As long as the amounts have been remitted, why is it important? It is important because I'll give you an example. My housing loan was due. 31st March, my housing loan was due. Now I do not pay. Now, instead of paying, what do? I ask the bank for a fresh facility, and using that fresh facility, I service this loan. Is that correct? No, that is not correct. So getting an additional facility, now this is a fundamental principle. I'll repeat this, fundamental principle, and the most commonly found problem in bank audits, or the issue in bank audits, is this. It is called evergreening. Evergreening means you are always greening. Evergreening. Evergreening means what? Means an account which is likely to turn NPA, which should have been turned, which should in the normal course the borrower is not paying, would have turned NPA. This, using an additional facility, this account is evergreened. This account is made regular. That is called evergreen. So for that purpose, reviewing SMA as at 1st March 2021 will help us, because we're going to analyze how this account has been regularized as of March 31st, 2021, how it has been regularized. We are going to ensure that there is no evergreening. During our course, during our stint in bank audits, right from the beginning, we have seen numerous instances. This is not limited to a specific bank or a specific branch. Across banks, we will find a number of instances where you will see a fresh facility coming in to service an existing facility. If it is classified as NPA, well and good. If it is not, this is something which is frowned upon. There's something which even the regulator, RBI, also frowns upon. As a branch auditor, it is our responsibility to ensure that at least for the major cases, there are no such instances of evergreening. How we can do that, practically how we can go about doing that, we will get to a little later. But this is just to explain why this SMA list is important as at 1st March 2021. Now, we've discussed advances types, we've discussed SMA. Now we'll quickly go through the NPA type. Now, NPA type, you have to understand what the NPA type, or rather the NPA classification norms. When does an account turn NPA? For this, we have to put it under various buckets. The buckets would be term loan, ODCC, depending on what is the facility. So one by one, we'll take it. NPA norms for a cash credit facility. Sorry, for a term loan. I'll start off with the term loan facility. For a term loan facility, IRAC norm states that the interest or principal is overdue for more than 90 days, then an account turns NPA. Interest or principal is overdue for more than 90 days, then an account turns NPA. So again, coming back to the housing loan example, if a person has taken a housing loan and he defaults in repayment, when does an account turn NPA? If he does not pay the EMI for which month, will the account turn NPA as at March 31, 2021? If the borrower does not make the payment of which month does an account turn NPA? If anyone can help me out, it'll be great. If I do not pay the installment of which month will the account turn NPA as at 31st March 2021?
December.
Exactly. It'll be, so December installment, if it's not paid, technically it is 90 days. Should we exactly count 90? Not required. 3 quarters, 3 months rather, the account will turn NPA. So this is the most simple logic, term loan within 90 days. Now, overdue, what does overdue means? So any amount which is due, if it is not paid, it is called overdue. So the amount has been there. So it can either work out as a EMI facility, or it can work out as principal being paid and interest as and when debited should be serviced. So under whatever, when the amount is due, if it is not paid, the account will turn, will be in default. And if the default persists for 90 days, exceeding 90 days, as I was rightly saying, if December installment is not paid by March 31, the account will turn NPA. Now, why is this important? As Regis was talking about the system-based automatic classification in the beginning of the session, right now it is mandatory that classification of NPA should be manually sit and compute, not required. Automatically, Finacle or whatever CBS the bank is currently on will automatically classify the account as NPA. If December installment is not paid within 31st March, automatically system will classify the account as NPA. Manually, no one needs to intervene and classify it. Why is this important then? Why should you know this? You should know this because what happens is regularization happens, which may not be acceptable, which may be evergreening, which may not be exactly as per the terms, which is why we should exactly understand what are the norms. Only then can we question the account classification. So this is term loan. Term loan is more or less straitjacket, nothing special there. CC, we should all know, and this is where many concepts which will be interest to members as well will come in. CC, OD. CC, I'm using CC and OD interchangeably, cash credit and overdraft. Earlier, as we discussed, this is a running account facility. It is a working capital facility for which operations are important. So you will find that the NPA norms for a working capital facility is also intended in such a way that they want the borrower to be regularly operating this account. So there are 3 principles for a cash credit or overdraft facility. 3 conditions have been specified. One is outstanding balance greater than DPR limit for 90 days. Now, this concept is new, drawing power. Drawing, if you ask me, what is the one single most important concept that we should know while doing bank audits, I would say it is drawing power. Because everything else, even if we have a situation where the person looking into an account is not aware of some regulation or the other, the bank itself has a system. So more or less it will get captured. But drawing power is one which is prone to a number of errors. And the number of instances of divergences across banks, it will run to crores. And it largely stems from this particular two-letter, innocuous looking two-letter word called drawing power. Drawing power, what is drawing power? Now, drawing power, the concept of drawing power is ODCC, as we earlier discussed, is a working capital facility. It is given for routine operations. What is the limit? For example, let's say a facility is given for 1 crore. That is the sanction limit of a OD facility. 1 crore is facility is given. Now, a borrower who's operating a working capital facility can operate up to 1 crore. He can withdraw up to 1 crore and he can operate up to 1 crore. That is the sanction limit. But there is another rider called a drawing power. Even though his limit is 1 crore, there is something called a drawing power that is also fixed. What is drawing power? Drawing power is fixed based on stock and debtors. Drawing power is fixed based on stock and debtors that the borrower has. Based on this is a limiting factor. Let us say 1 crore is the limit. Based on the drawing power, based on stock and book debtors, if drawing power computed is only 90 lakhs, the borrower can avail only 90 lakhs, not 1 crore. So it is lower of limit or DP. Only that can be done. So again, what is the regulation here? If the outstanding balance is exceeding the drawing power or limit, whichever is lower, for more than 90 days, then in this particular case, the account will turn NPA. So the outstanding, so we have to see what is the drawing power, which is the, how much is the limit. See which, so in the earlier example, 90 lakhs or 1 crore. Drawing power is only 90 lakhs. Limit is 1 crore, 90 lakhs is lower. So the limit fixed is whichever is lower, drawing power is taken. That drawing power is kept on one hand. Outstanding balance is taken on the other. Now, if the outstanding balance continuously is more than the drawing power or limit, whichever is higher, that means in our case 90 lakhs, that is the higher figure. That is a lower figure. If it is continuously exceeding that, the account will be classified as NPA. Outstanding balance higher than 90 lakhs, then the account will turn NPA if that happens continuously for 90 days. This is the first regulation, which is why drawing power is extremely important. Drawing power is computed based on stock and debtors. It is the bank stipulates how drawing power has to be computed. Now, this is where the borrower can play around. This is where the borrower can furnish information which is incorrect. This is where the bank branch also can play around and make an account which is otherwise should be classified as NPA, that can be classified as a regular account by playing around with the drawing power. Makes our job so much more difficult. So how to verify drawing power? This immediately after this I'll be taking how this has to be verified. Let us understand the first regulation. This is the first regulation. Second one, outstanding balance is less than sanction limit. So that condition is there, but there are no credits. There are no credits. Now, what is a credit in an account? Again, for the benefit of students, what is a credit? Credit means a deposit. So you're talking from the bank's perspective. So a credit in an account means a credit in a borrower's account means the borrower has deposited some amount. So for 90 days, if the borrower has not remitted any amounts, if there are no credits in the borrower's account for 90 days continuously, then the account will turn NPA. This is condition number 2. Condition number 3 is credits are there. Second condition, the credits are there. However, the credits are not sufficient to cover the interest debits. There are interest debits during the period. There are credits during the period. The interest debits are more than the credits during the period. Credits means deposits during the period. So then the account will be classified as NPA. It is or it is not and. It is or it is not and. Now, very, very important point. This is one question or one doubt which I've heard multiple times from right from my articleship days. This question has always come up among the team members, among the bank. One question that comes up is, what is out of order? This is out of order. Should the advance or the CC become out of order for 90 days? I'll repeat that. What does it say? If any of these 3 conditions are satisfied, IRAC regulation says that an account will become out of order if one of these 3 things happen. These 3 things that we just stated, one of these 3 things happen, the account will become out of order, the account will become NPA. Out of order for 90 days nokana, or is it out of order? Out of order, Madi. It is only out of order. You need not be out of order for 90 days. So you will get only 90 days. Outstanding balance greater than DPR limit for 90 days means out of order. Angane 90 days ponda. Total 180 days kitilla. It is only 90 days. Total 90 days is only there. Second condition, total 90 days is there. Third condition also, you see credits during the period, you see debits during the period for 90 days. If that is the case, the account will become out of order. If the account is out of order, immediately the account will become non-performing. If you read the IRAC circulars, it is a little confusing initially, but if you closely read it, it is very, very clear that an account which is out of order has to be classified as NPA. We've heard this argument coming so many times that the branch manager will come and say, yes, it is out of order, sir, but it is not out of order for 90 days. So then initially you'll have a doubt. Oh my God, what is he saying? He's right. It's only out of order. It is not out of order for 90 days. The point is, it need not be out of order for 90 days. It only has to be out of order, because for out of order, already 90 days is default time. So once he's defaulted for 90 days, only he has become out of order. Once he's out of order, he is NPA account. No further 90 days is permitted. So this is a very, very important point that we have to note. Is there any further, any difference of opinion or anything further to add on this point? Anything further on out of order or anything relating to the NPA norms which you've discussed so far? I'm assuming there isn't anything. Again, if there is any clarification or any further discussion required, please feel free to interrupt me. So we've discussed NPA norms for term loan. We've discussed NPA norms for cash credit. All the other,
Sir, can you,
yeah,
sir, Vivek, sir, can you explain the difference between CC and OD? One.
Yes,
CC
sir.
and OD. One.
Yes, sir.
Second
Yes,
is,
sir. Yeah.
just now you are told even if it is out of order for 1 day during the 90 days, it is out of order. Is it correct?
Sir, yeah, so both I'll clarify once again, sir. So on the first point, difference between cash credit and overdraft. Now, in many banks, it is used interchangeably. Cash credit and the term cash credit and overdraft is often used interchangeably. But many other banks, what I've noticed, or this is the most common thing, is cash credit is what we just described, where a limit is given. That limit is 1 crore or 90 lakhs, whatever be the limit. Such a limit is provided to the borrower, and accordingly he will operate within that. An overdraft, sometimes also an overdraft, how it is normally given is that it is given normally as a current account with an option to overdraw. So a current account given with an option to overdraw is classified as, or nomenclature is given as a overdraft and separately given. Whatever be that differs from bank to bank. Even in our guidance note also, if you see, that very distinct difference is not brought out. So it can, and many banks, most of the banks you would have noticed that it is used interchangeably. The final difference, as I said, is in a cash credit, it is given as the normal cash credit facilities that we see. Borrower, the SS cash, the working capital requirement, and then accordingly a sanction limit is fixed, a drawing power is fixed, and accordingly done. An overdraft typically sometimes in some of the banks is given as a current account with an option to overdraft up to a limit. So normally, quite similar to a temporary overdraft, something of that sort. So there's only a subtle difference, but for NPA regulations, IRCA regulations, it can be taken as being very, very similar. So to answer your second question, so I'll just explain this conditions once again, then it'll be clear. A cash credit or an overdraft facility will be out of order if one of these three conditions are satisfied. Outstanding balance greater than DP or limit for 90 days. So for it to be out of order, sir, it has to be exceeding the DP or limit for 90 days. For example, Jan 1st to March 31 onwards, it is continuously exceeding, means as at March 31, 2021, the account is out of order. When the account is out of order, immediately the account become NPA. So like that, as out of order, further 90 days, it need not continue. Total 180 days is not available for these conditions. For stock audit report and all that, stock statement and all that, 180 days is there. But for these three conditions, only 90 days is there. 180 days is not there. So for 90 days, if one of these three conditions are satisfied, then the account will become NPA on out of order and consequently NPA on the 90th day. Is that clear, sir? So NPA or out of order for 90 days. It means yes. Yes, it means that on the 90th day the account will become out of order and the account will become NPA.
Okay, sir. One more doubt.
Sir. Yes, sir.
Suppose the amount is exceeding sanctioned limit.
Yes, sir.
What happens?
So
say for some 10 days or 1 month, it is exceeding sanctioned limit. That is, yes, branch power is exceeded.
Yes, sir.
What happens?
Yeah, so for this condition, so we are seeing sanction limit on one hand and the drawing power. So in this particular case, for in your example, so you're saying that the sanction limit is 1 crore. The drawing power, let us say, it is 1.1 crore. So your question is, if it is, you have to take, so in this particular case, you have to take the lower of the two. So 1 crore versus DP 1.1 crore means you have to take only sanction limit, which is 1 crore. So if it exceeds for 10 days, the account will not be classified as NPA. For our LFIR purpose, certainly we have to see whether it is within branch delegation. And if the branch delegation, if it is exceeding the branch delegation, then internal approval is required. We have to ensure that it is ratified. If the ratification is not properly on record, it has to be taken up. However, it will not affect the classification. This will not directly affect the classification. Certainly, if this is brought to the notice, I'm sure the ratification will also will come in. So, but if you feel that no, it indicates a severe weakness, certainly it has to come out as part of a CBS weakness. It has to be reported in LFIR also. If it is the case that the branch manager is exceeding the delegation of authority and giving the facility. But however, whatever be the case, as far as NPA regulations are concerned, these are the conditions, and it has to exceed for 90 days for it to be classified as NPA. Right, sir. So thank you so much for those questions. Anything further to discuss? Any other points on this? Because this basically forms this is the fundamental concept. If anything requires further elaboration, further clarification, we can discuss that again. Again, no problem in repeating the point. Anything which requires further clarification? Okay, I'm assuming not. So next point is now on drawing power. This is what I wanted to explain. What is drawing power? So I quickly explained that DPR limit we have to see. In my example earlier, I had said that 90 lakhs or 1 crore, whichever is lower has to be taken. If it is exceeding 90 lakhs or 1 crore, that means in 90 lakhs in my example, then it'll be NPA. Now, how drawing power is worked out. This, as I was earlier saying, is the most critical aspect of a bank audit. How drawing power is computed. Most of the divergences which we have found out are primarily 90% of that comes out of this incorrect computation of drawing power. So what are the errors? What are the issues? How we can find that out? I'll quickly take you through that. So drawing power, as I said, is fixed based on closing stock and debtors. So how is this done? So in this particular example, closing stock is 1 crore, 100 lakhs, creditors is 20, paid stock is 80. Margin is 25%, net is 60. What is this? There are two very important concepts here. Closing stock means closing stock of inventory is 100 lakhs. Creditors has been reduced 20 lakhs. This is the first and the most commonly found error. Creditors will not be reduced. Creditors, the borrowers will not reduce creditors. That is not correct. What is the concept of reducing creditors? The bank is actually financing paid stock. Now, to this extent, what is happening? The amount of unpaid stock should also not be financed. The bank is only financing paid stock and not unpaid stock. So that is the logic behind reducing creditors. Under whatever method, creditors should be reduced from closing stock, and then the net paid stock has to be arrived. Now, when the borrower is submitting his DP statement, you will often find that creditors have not been reduced. You go to the branch manager, he will say he is submitting a net of creditors. Already from inventory, creditors have been reduced, and then only net inventory is being provided. I strongly feel that blindly we should not accept it unless proper justification has been obtained by the branch manager or the person who is handling the account to ensure that the creditors have been reduced and only net paid stock has been taken. From the paid stock, then margin has to be reduced. How do you find out margin? That will be stipulated in the sanction order itself. So closing stock, less creditors will give paid stock. From the paid stock, reduce margin, whatever stipulated in the sanction conditions, and you will get net. Net drawing power on closing stock is 60. Let us say that is A. Next is DP on debtors. Debtors, let us say it is 80. Debtors exceeding 90 days have been reduced. 90 days, 120 days, 180 days. Sorry, sanction order conditions will specify to above what limit should be ignored. So let us say in this particular case, the debtors above 90 days is saying should not be taken. So eliminate that, and the debtors allowed for drawing power should be taken. On that, margin has to be reduced and net DP has to be computed. On each of these items, we can state a lot of examples where they've messed it up, resulting in higher DP, wrongly computed higher DP, and borrower wrongly being classified as standard where it should have been reclassified as a non-performing advance. So this is an extremely important aspect and probably the most important area to be covered in our session today is this aspect of drawing power. So in drawing power, how do we verify this? How are the practically now the computation I hope is clear. Creditors have to be reduced, margin has to be reduced. In debtors also, See, debtors, whatever be the, not just debtors exceeding a certain limit, we also have to look into the sanction order, see what is mentioned in the sanction order. Sometimes, we have, there are instances we've seen, it says all receivables from associate and subsidiary companies should be eliminated. Is there as a standard condition in the sanction order. Now, you will find that in the drawing power, very religiously, they would have taken, debtor, your sister concern debts would have all been taken. In the sanction order, however, they will be specifically mentioning not to take associate concerns or subsidiary companies ka amount of debtors. So if this is how the bank is computing or the branch is computing, clearly if you recompute, there is a possibility that the DP will be lower, and you see the sanction order or the balance outstanding, it will be continuously exceeding the recomputed drawing power, the account will turn NPA. So again, to repeat, you compute the DP correctly, then compare that with the outstanding balance. If the outstanding balance exceeds this recomputed drawing power continuously for 90 days, the account will turn NPA. So that is what I wanted to bring out here, the most important concept of drawing power. Now, the I'm saying that, creditors, we have to see, debtors, we have to see. Practically now, how do we go about doing it? 31st March 2021, we are we are doing the branch audit. Now we're going to a bank, we're saying a branch audit. We are doing the branch audit. Let us say we take an account of 10 crores. The total term loan plus working capital facility is 10 crores. 5 crores is ODCC facility, 5 crores is term loan. In the ODCC facility of 5 crores, we are now analyzing whether it is regular. Now, once we start analyzing this, now how do I find out? How do I check each of these items? Closing stock, creditors, paid stock. The bank has furnished the position as January, February, March. The borrower has furnished as December, January, February, March. All 3 months the borrower has furnished. How do I check whether closing stock given is correct? How do I check whether creditors has been reduced correctly? How do I check whether debtors has been taken correctly? So some common ways how we have found this out, I'll just take you through that. There are two very important things that we have in our hands, which we can use. Two very important weapons in our hand, which we can use to check whether this is correct. The first weapon I would say is our audited financial statements as at 31st March 2020. 31st March 2020 financial statements of the borrower we would be having. Correct? 31st March 2020 audited financial statements we will be having. Now, what else is there? We have the DP statement which the borrower has given in March 2020, not March 2021, but March 2020, whatever the borrower has given. That also we have. March 20 financials, March 20 DP statement. Well, DP statement, for the benefit of students, what is a drawing power statement? Every month, the borrower should submit a drawing power statement. The drawing power statement is something which looks exactly like this. He will mention what is a drawing power, and based on that DP statement furnished by the borrower, we will enter that into the system. And this NPA condition that we spoke about, right? Balance outside, balance exceeding limit or DP. For that computation, we should know the DP. For the bank to know the DP, borrower furnishes the DP details in more or less in this format. So that is called a DP statement. So again, coming back to the point, DP statement as at March 2020 I have. Financial statements as at March 2020 I have. These two can be compared. These two can be compared. There is an inventory that he is given as 100. In this example, let us say 1 crore inventory, that 100 lakhs inventory is shown. You take the financial statements. If you see that the closing stock as at 31st March 2020 is only 50 lakhs or 40 lakhs, what does it mean? Clearly, he has been overstating his financials. Sorry, clearly he has been overstating his DP statement. It clearly indicates that there is a overstated figure which has been submitted to the bank. It is not reliable. Accordingly, that can be reworked. That DP can be reworked, and accordingly, the account can be classified as NPA based on the audited financial statements. Likewise, creditors. Creditors, if it is a partnership firm, creditors for goods and creditors for expenses will certainly be there. The breakup will be there. If it's a company, you may not find the breakup of creditors, but whatever it is, you can take some percentage of trade payables and assume that it is for goods depending on the type. If he's a manufacturer, if he's a service provider, accordingly we can do that. So accordingly, we can reduce or understand whether the value of creditors which has been accepted is correct or not, can be taken on this manner. Based on what? Financial statements as at March 2020 versus DP statements as at March 2020. Margin, you can take it from the sanction order. Debtors greater than 90 days. How do you find this out? This is not directly available. Okay, it is not directly available. What can you see? You take audited financial statements as at March 2020. You take the DP statements as at March 2020. If it is a company, debtors exceeding 180 days will be mentioned. Debtors exceeding 180 days will be mentioned, and debtors less than 180 days will be mentioned. Now tell me this, if a debtor is exceeding 180 days, surely he will be exceeding 90 days also. If a debtor is exceeding 180 days, surely he will be exceeding 90 days also. So if the borrower has taken a debtor who's exceeding 90 days, you can compare that with financials and see that the borrower, actually the debtor is exceeding 180 days. So to that extent, you can eliminate and then reduce from this DP computation. To repeat, a debtor who's exceeding 180 days certainly will be exceeding 90 days. Compare that with this and accordingly reduce. And margin again comes from the sanction order, and accordingly the net drawing power can be computed. So what have I done here? I've compared March 2020 financials. That is the first weapon in our hands. March 2020 financials versus DP statement. Now the branch manager will say, sir, this is March 2020. You are auditing for this year. How can you do that, sir? How can you verify? How can you recompute? The branch manager will ask you. The point is, yes, I cannot do that. But what I will do is, based on this, I will say, let us say, in our example, closing stock, what the branch manager or the borrower submitted is 1 crore. What the financial showed was only 50 lakhs. I will say, I will take only 50%, which means that 50% of this value, whatever he's saying, he is overstating it. So unless the branch is able to give me a solid reason why there is a difference between financials versus the DP statement, what will I do? I will correspondingly, every other DP statement subsequently, whatever is furnished, this adjustment I will make. I will assume that if he's saying 100 or if he's saying this creditors stock value, closing stock value is 1 crore, I will take it only as 50 lakhs because that is my experience with the financial statements. Next month, if he's giving 120 lakhs, I will take only 60 lakhs. Unless the branch is able to substantiate the difference. We will insist that it has to be recomputed, and accordingly DP has to be recomputed and the account can be classified as NPA. So I hope this aspect was clear. This is a very important aspect of recomputing the drawing power based on the financial statements for every subsequent drawing power statement that the borrower is giving. This can be recomputed, and accordingly the account can be classified as NPA. Any questions on this? Is a very, very critical aspect. I can explain the entire and discuss the entire thing again if required. Any further discussion that is required on this? Any further discussion on this? Should I explain this concept once again, sir? I hope it is clear.
It's clear, sir. It's clear.
Thank you so much. All right. So then this is how this can be compared. So I've spoken of the first weapon in our hands, the audited financial statement. The second weapon that we have in our hands is the stock audit report. Now, stock audit report is mandatorily required for facilities which are exceeding 5 crores. So the smaller accounts, the second weapon is not there, only the first weapon will be there. But the second weapon is available in the case of an account which is exceeding 5 crores. If an account is exceeding 5 crores, mandatorily, they will be taking the stock audit report. Now, in the stock audit report, clearly the stock auditor would have mentioned what is a DP statement versus what is the actual drawing power. This would be computed. So please, every DP or every ODCC facility that we are auditing, please let us take the stock audit report. If it is available. If it is not available, if it's not mandatorily required to be done, we don't have that in our hands. But if it is there, if it is available, kindly verify that. If there is a difference between the stock audit report and the DP statement, please ensure that appropriate action is taken. Most commonly found error is this. The stock audit report is obtained, it is kept in the file, nothing is done on that. The branch manager would be knowing that there is an issue, but he does not act any further on that. Then what happens? We come and find this out, then we can raise this point. So very, very important that the second point is stock audit report. So two aspects once again, audited financials of March 2020 versus DP statement of March 2020, stock audit report whenever it is done versus the DP statement of that particular month if you see, that also can be compared. If there is an anomaly, if there is a mismatch, the branch manager should properly be able to explain it. If he is not able to explain the difference, he cannot say that stock auditor was wrong, because he has accepted the stock audit report and he's kept it in his file. He cannot say that I'm not accepting stock audit report. We should go by the stock audit report. We should recompute the DP for all subsequent months, and accordingly, if it is lower, if the balance outstanding is exceeding the recomputed DP this way, the account has to be classified as NPA. So these are two very, very important aspects which are coming out of drawing power. To summarize, verify the audited financial statements as on March 2020 versus the DP statement. Verify the stock audit report versus the DP statement. See if there is a difference. If there is a difference, recompute the drawing power for every subsequent month accordingly, and consequent DP fault, compare it with the balance outstanding. If the balance outstanding is exceeding this recomputed DP for 90 days, kindly recommend this account for NPA classification. Kindly recommend this account for NPA classification. So which is why this concept of DP is extremely important. Now, what often we've noticed is an account which is otherwise very weak, but technically for some reason, somehow it is surviving. Now, DP drawing power is a very important tool in our hands that we can use to classify this account as NPA. See, we don't have any targets, or we don't get any sadistic pleasure out of classifying an account as NPA. An account as an NPA. But the point here is rising, somehow they are evergreening. That is not acceptable. That will be reported as a divergence. The account, there will be an issue. So to that extent, kindly ensure that there are no such, to ensure that there are no such divergences. Drawing power is a very, very, very important tool in our hands that we can use. So, which is why, as I was saying again at the beginning, drawing power is probably the most important aspect which I'm going to be covering the session today. So, anything further on drawing power? Any aspect which needs to be covered? If not, I'll move on to the next one. So, we've covered term loan, we've covered ODCC. Now, what about the other facilities? To quickly brush your. In fact, I'm sorry, I should have also taken this. In ODCC accounts, there are two additional conditions. So the first on the financial terms, or the based on the balance outstanding, very clearly, we have mentioned what it is. These are the quantitative details that are there. So based on certain qualitative details also, ODCC facility can turn NPA. This is very, very important. First condition, we discussed about stock statements. If the stock statements are older than 3 months, then the account will become irregular. Now, if on the base of irregular accounts, 90 days the operations are allowed, then the account will become NPA. So this is a very important difference from the earlier point. A DP statement older than 3 months means account will become irregular, not out of order, but irregular. Like that, if you continue for 3 more months, that means the account will turn NPA. So what does this mean? So total, how long do we have? Total, how long is there? ODCC facility, total, how long is there now? For a stock audit report, I'm sorry, for a DP statement, a stock statement or a debtor statement, if it is how old, will you say that no, this is not acceptable, the account is going to be classified as NPA? Is it 90 days or 180 days?
180 days.
Sorry, sir?
186 months.
Exactly. So there it is 6 months. So that is where, normally that is where we confuse between this and the earlier one. The branch manager also is confusing this with the second one. The first one is out of order. Here you have only 90 days. So these 3 conditions, you only have 90 days. But for these 2 conditions, you have 180 days. It is not 90. Second one is, earlier we discussed that it is, the account has to be renewed or regularized every once in a year or whatever is the period. Now, if this regularization or the renewal does not happen, then up to 6 months it is okay. After 6 months, the account will further be classified as NPA. For example, September 30, 2020, the account, let us say, was due for renewal. The ODCC was due for renewal. March 31, 2021, also the account has not been renewed. Then the account will be classified as NPA. Why would an account not be renewed? It is only internal. Only the branch manager needs to do it. What is the practical difficulty? So the practical difficulty is when especially for the larger facilities, the larger balances, the delegation of authority itself will require a more senior person to be looking into it. That means the approval will be at the zonal office, regional office, etc. There it will be more stringent. So you have to submit, for example, latest financial statements has to be submitted, or earlier overdrawings have to be regularized. Such conditions will be stipulated. The branch manager would not be able to rectify those conditions, hence he would not be renewing it. Hence the account will turn NPA for non-renewal, because otherwise normally we think it is within the branch. Why would he not renew? He would not be renewing for condition for all these allied things like financials not obtained, or a variety of other things. So long story short, if the DP statement is older than 6 months, if the account is not renewed for more than 6 months, the account will be classified as NPA. So these are the qualitative parameters. The quantitative parameters was the earlier matters. These three conditions are the quantitative parameters, and these two conditions are the qualitative parameters as far as a overdraft or a cash credit facility is concerned. Overdraft or a cash credit facility will probably be the single most difficult, or rather the single most area of concern for us, because that's where the maximum number of divergences will also be noted. So moving on.
Sir, hello.
Yes, sir.
I have a small doubt regarding this irregular of receipt of this stock statement. Okay. See, for example, if a bank receive only one statement or stock statement in October for a particular year, is it irregular? We can say October, after October, November, December, January is irregular. Then will still be, if we have time for another 3 months now, after 3 months on it will become NPA, right?
Yes, sir. So then it is okay.
Practically, we got bank got only one stock statement in a year. So that is only up to only December, October, say October. Is it irregular and NPA, or it is a normal? Is it no problem at all?
So yes, sir. This is a very valid question. For this, my question is, if you had asked me this question last year, it would have been a little different. Current year, my answer is a little different. Why? I'll tell you. For that, it is important to understand how are we currently, where are we right now. So before I explain this, I will take you through the chronology of events once again, and which makes it important to discuss one very important thing. So Srijit sir, so before I explain this, I will quickly say what is the current position and a very important decision or Supreme Court decision also which came in today, and an earlier decision which was there. So all these due for the current period, all the NPA regulations which I discussed, though it is there was an instruction of there was a standstill clause as instructed by RBI. What is it instructed by Supreme Court? What is this? I will take you through that particular this thing now. So yeah, so this is this will help me. So if you see this, how did this happen? Now this after in the chronology of events post COVID-19, this is what happened. As you're aware, in March 27, 2020, moratorium was introduced. Correct. Okay. So then, and after that, April 17, they said asset classification benefits will be extended.
Okay.
Now, in the asset classification benefits, the qualitative aspects were not touched upon.
Okay.
Because moratorium, they did not say you need not submit stock statement. Correct.
Okay.
So that qualitative benefit was not given. So then this confusion was there whether the moratorium benefit that was given in April 17 extends only to quantitative things like ODCC not exceeding and all that, or whether is stock statement, or whether it applies to that as well. Since it is not specifically mentioned, it should be interpreted that the borrower is not exempted from submitting the stock statement and DP statement. So he has to continue doing that.
Okay.
However, what happened till 31st August 2020, there was a moratorium. After that, in September, Supreme Court came out with an order in the case of Gajendra Sharma. That's the case law. There they said that, and there were a lot of other petitioners also. They stated that the Gajendra Sharma wanted extension of moratorium after 31st August also. That was the case. What Supreme Court said is, right now we are considering this. However, classification of NPA should temporarily not, they should not further classify an account as NPA. Banks should not classify accounts as NPA till Supreme Court gives further orders. In September 2020, so this is an extremely important thing. September 2020, Supreme Court came up with an order stating that is this in the case of Gajendra Sharma. In that case, Supreme Court said no accounts needs to be classified till we come with fresh orders. So since that was the case, sir, in your example, in October 2020 also, there is no difference. Effectively, it is only October 20. Earlier also, we could not have classified this account as NPA because his orders were. So till August 17, he had till August 31st August, that moratorium was there. Classification was not there. After August, Supreme Court came up with this order, which is why I said current year my answer is different. Last year, if you had asked me, I would have said because from April to September he is not submitted.
Not submitted.
So then technically October the account is NPA. Now you have to upgrade the account.
Yes.
So for upgradation, not just this is sufficient, you have to see the overall health, and then if the overall health is okay, then you can upgrade.
Okay,
Because
okay,
this,
okay.
so that's why I said last year my answer is different, this year my answer is different. This year, so to answer your question, sir, so I think, so I'll cut to the chase now. So in that sense, the earlier suspense which I spoke about, I will explain that now. What has happened today? Something major has happened today. So I explained that, Gajendra Sharma's case said that no accounts has to be, the account classification as NPA has to be suspended for now. Now, today it has all been disposed by Supreme Court stating that you can start classifying from 31st August 2020 itself, start classifying again.
Okay.
So now it is restored. NPA classification is restored. That it was pronounced today morning, and the order came. So I think a couple of hours before our presentation only the order has come, and that is the last line which I have written. That that the case is Small Scale Industrial Manufacturers Association, and others. So this is the case law. So there are two things which have come out of this, sir. Two major aspects have come out of this decision. First is, as I said, NPA classification has been restored. Now, so it is just like last year. Now you have to start branch audit us again. Now have to start classifying as an account as NPA. All those the NPA, the standstill clause has been removed with effect from today. It has been removed with effect from 31st August 2020. It has been removed starting today.
Okay.
Second thing they said is this, that is now it has to be more clarity has to come. This ex gratia scheme was there, right, sir? Ex gratia scheme was for less than 2 crores.
Yes.
The ex gratia scheme was for less than 2 crores. Now,
Sir, up to today, there is no NPA classification. From August up to today, it is not there. Even if it is NPA, tomorrow I can regularize,
sir, so yeah, so now what they're saying is the position till 31st August only you can take based on Supreme Court decision. Oh, sorry, you can take based on the moratorium. After 31st August, that position has changed. So now you are free to start your classification. So when you start classifying, you can start. So it is not with prospective effect. It is a prospective effect from 1st September. That means now, so quite simply put, for our current quarter, now obviously all our conditions will be from our 90-day norms. So we have to start reviewing from 90 days. Now the question will be for an account which has a 31st December, an account. So one more concept that I had explained. It was called Proforma NPA. Proforma NPA was what they called it. Proforma NPA means as of 31st December, the account is technically NPA. However, because Supreme Court's standstill order was there, the account was not classified as NPA because of Supreme Court decision. So it was called as a Proforma invoice. So if you see the published results of all the banks up to December, September and all, you will find this clause that it is a Proforma NPA. Because of the Proforma NPA, so much. So what they did is in standard asset provisioning, they increase the provisioning to that extent.
So now, if it is effective from 1st September, now it has to be reclassified as NPA, if it is NPA, right?
Right, absolutely. Absolutely.
So they have to make a provision for that.
Absolutely. So now, so bank, this has just come. Banks, immediately what they'll be doing is, so earlier what was done is they were following an automated system of NPA classification, isn't it? So what did they do? Manually, they were overriding it through manual intervention. They were not allowing the system to classify it. That is what is happening. 30th September. 30th,
yeah.
Sorry.
Now there is a risk that we have to check whether it is classified from September 1st, right?
So that I'll tell you. So one point is correct, but now when we are sitting on 31st March, let us say because the account would have been upgraded. So now typically what now banks are going to do is as at 31st March, they will see 3 months only, because otherwise the account, if it is subsequently regularized, it can be upgraded, isn't it?
Yeah.
Yeah.
Yes,
So
that's
then
right.
they will see the last quarter. They will typically see the last quarter, and then check for the classification. But the important aspect is that now it is restored. We are in a normal year itself. By today's judgment, everything has changed. We are now back in the old position as before. Our branch audit will continue like in earlier years. We are starting the whole process again. That has been because of the decision which has been pronounced today.
Okay.
Any interesting discussions? Anything further to discuss here?
No, that's the only things. Yeah, thank you.
Yeah. So to summarize all that, so if anyone of you is not following what we were discussing, all the NPA discussions and all that we have had is what is mentioned in IRAC, is what is mentioned in RPS guidelines. However, because of COVID, certain relaxations were given. As part of those relaxations, a Supreme Court order came in September. So up till 31st August 2020, moratorium was there. In September 2020, Supreme Court said that we are examining whether moratorium needs to be extended. Till such time, till we give further notice, no further classification as NPA is what Supreme Court ordered. So such accounts, banks stopped classifying it. Some of the banks were creating additional provision, calling it as a under standard provisioning, calling it a pro forma NPA or a notional NPA. They started creating additional provisioning under standard assets itself. Now what has happened, Supreme Court by today's decision has stated that now it is restored as a NPA classification is restored from 31st August itself. Now you can start classifying the accounts again. So that has happened. So again, now banks will immediately start lifting off all the manual interventions, and automated classification of NPA accounts will continue in the CBS. Will continue in the, what is CBS for students? CBS means core banking solution. നമ്മൾ ഒരു സാധാരണ കമ്പനിയിൽ SAP ERP പറയുന്ന പോലെ തന്നെ ബാങ്കിനെ സംബന്ധിച്ചോളം it is called a core banking solution. A core banking solution basically covers all these other facets as well. So it is integrated with a lot of other allied applications, and that is called a core banking solution. The most common thing probably would be Finacle. Yeah.
അപ്പൊ അങ്ങനെയാണെങ്കിൽ നമ്മൾ ഈ ഓഗസ്റ്റ് കഴിഞ്ഞ് സെപ്റ്റംബറിൽ തൊട്ട് NPA ക്ലാസിഫിക്കേഷൻ വരില്ലേ, ആ സമയത്ത് NPA ആവുമായിരുന്നത് നോക്കി അവർ NPA ചെയ്യേണ്ടതുണ്ടോ ബാങ്ക്?
സർ ഇപ്പൊ എങ്ങനെയാ, ഹൗ ഇറ്റ് വിൽ സ്റ്റാർട്ട് ഇസ്, ഇപ്പോ ഓഗസ്റ്റ് 31st വരെ എന്തായാലും മൊറട്ടോറിയം ഉണ്ടായിരുന്നു. സോ ടിപ്പിക്കലി യു വിൽ ഫൈൻഡ് ദാറ്റ് ഈ പറഞ്ഞ അക്കൗണ്ടുകൾക്കൊക്കെ there will not be any default as such, because they will be under moratorium. Because whoever was struggling and all that, they will be under moratorium. So in any case, this will not be coming. Now,
so after next 3 months.
Next 3 months. So this I'll tell you. So there are two ways. Typically now, you can when you're sitting in March 2021, you need to see 90-day norms. You can start working from Jan 2021 onwards. For example, let's say individually, let us see. If it is a term loan facility, you will see whether December installment has been paid. If that is not paid,
but as on 31st March ജനുവരിക്ക് ശേഷം ഡിഫോൾട്ട് ആകുന്നതാണെങ്കിൽ, ഞാൻ പറഞ്ഞത് ഓഗസ്റ്റ് കഴിഞ്ഞിട്ട് സെപ്റ്റംബർ ഒക്ടോബർ നവംബറിൽ ഡിഫോൾട്ട് ആയി ഈ 3 മാസം ഡിഫോൾട്ട് ആണെങ്കിൽ ആക്ച്വലി ഡിസംബറിൽ NPA ആവുമല്ലോ. അപ്പൊ അത് കണ്ടിന്യൂ ചെയ്യണ്ടേ ശരിക്കും?
വളരെ സർ പറഞ്ഞ എനിക്ക് ഫുള്ളി മനസ്സിലായി. അത് നമുക്ക് രണ്ട് രീതിയിൽ കാണാൻ. നമുക്ക് അപ്പൊ ദാറ്റ് സർട്ടൻലി വിൽ കം അപ്പ് ഫോർ ഡിബേറ്റ് നൗ. അപ്പൊ ആ കോൺസെപ്റ്റ് ഐ തിങ്ക് സോ ഫോർ എവരിവൺസ് ഇൻട്രസ്റ്റ്, when do you upgrade an account becomes very important. When you upgrade an account, for an account upgradation, all areas should be closed, not just the critical 90-day areas closed. All areas should be closed. That is a very, I'll repeat that point a little later again. For an account which is classified as NPA, for it to be upgraded, for all areas have to be closed, not just the critical areas. 90 days areas, all areas have to be closed. A question that is likely to be asked is, let us say he is not remitted for September, October and November. That means November 30, 2020, the account should have been classified as NPA, correct? Now, if that account was classified, now let us say in December 31, 2021, he has remitted the amounts. In this case, he is eligible for upgradation if he has remitted all the areas. Right, sir? So with that position, he has remitted all the areas. So I'm upgrading the account. So then I'm starting afresh. So then now what is outstanding is December has not been paid,
Last
January has not
3
been paid,
months.
February has not been paid. So that is one way of looking at it. If you're taking a stricter view, you can say that unless so an amount, you can say that an account which otherwise should have been classified as NPA as per the earlier one, or so September, October, November, if the installments are overdue, in December, the account had to be classified as NPA. Now you are classifying the account as NPA. And then ini you're saying that ini y'all upgrade full areas upgrade full areas close. You have to completely close all the areas. Only then can you upgrade the
complication.
Sir, this particular aspect, now what is going to happen is complication. This certainly some clarification will come regarding accounts which during the 3 months have been classified. But as you're aware, most of the banks follow a year and as in a quarter end basis of classification, which means 31st December is when you have to check this. So when you're doing a March 2021 audit, typically if an account has irregularities only to the extent of less than 90 days as it's 31st March 2021, prima facie it is okay, because that means
as an auditor we check that only.
Correct. So that part primarily, so our initial check is okay. You have to certainly do an additional check whether in his case, in December 31, 2020 also, if he was to be classified as NPA, then it means that all areas have to be cleared, not just the critical 90-day areas. So other stage I had to change it. It is a slightly more stricter thing. Banks are likely to create a confusion, but certainly, as you rightly said, it is something as a branch auditor, we should verify both. So first and foremost, see if 90-day norms are being classified. If that is being satisfied, we should certainly go one level below. December 31st, if the account is technically NPA, we should certainly state that all areas have to be cleared if he has to be upgraded and then considered. I think that is certainly a valid thing that we can say. So practically what will happen is most of these cases, banks had already classified it as a pro forma NPA. Most of the cases practically, I don't know, the problem because they have already classified it as a pro forma NPA. So for the upgradation, typically they will follow this area clearance procedure itself is what I think. If that is the case, then it is fine. Otherwise, we'll have to fight a little bit there. Certainly there is confusion to this extent. There is a confusion. Very, very valid point, sir. But I think, this additional, the only complication I see is this full for upgradation, full area should be closed, not just the critical areas. So otherwise a complication can come. But it's a very, very valid question. So it's a very valid question. Practically, I say I feel that 2 stages you have to do the verification. First for March, and then you have to go back to 1 quarter. December December also you have to see. Because and then August is okay because moratorium was there. 1 quarter before also. Yeah.
Okay. Thank you, sir.
Thank you, sir. Anything else? Any further very interesting questions? Anything further to be discussed on this? We have half an hour more. Maybe when it can take you through a few practical cases and quickly through COVID circulars also. But anything I need to further elaborate, I'll be more than happy to, further elaborate on any point which needs further clarification. Please feel free. Anything else? All right. So I think I'll yeah.
I think we have covered the term loan ODCC.
Yeah.
And we have other, not like agriculture loan.
Good. Yes, that's exactly where I was going. Yeah. So that's where this very interesting question came. So then I'll cover the other aspects, the other NPA norms. So we covered term loan, we covered CCOD. What about the remaining ones? So next one would be your this thing. These are 3 major ones that otherwise would come. Bills purchased or discounted. Here it is a 90-day norm. That means a bill has been discounted. When it is discounted, a due date is fixed. From the due date, it's very simple. It is within 90 days, you have to make the payment. It is as simple as that. So how do you verify this? For a bills purchase or a bills discounted facility, take the breakup, see the due date, whether it is overdue more than 90 days, please verify and close. So here, overdue more than 90 days has to be verified as in any other account. Next is agricultural advances. Agricultural advances, the concept is, it is slightly more lenient. Short duration crop, long duration crop. This is where it is important. If it is a long duration crop, if it is overdue for 1 crop season, then the account is NPA. For an agricultural advance, if it is overdue for 1 crop season, see, crop season will normally be 2 years ago. So that means 2 years repayment account NPA to classify. An agricultural advance, if it is a long duration crop, That means if it is overdue for one crop season. So one crop season means if it is a long duration, more than 1 year. So that means if it is overdue for more than 1 year, means 2 years. Stipulated duration will be 2 years. So 2 years repayment illengile agriculture NPA. Short duration 6 months. If it is 6 months, then for 2 crop seasons, that means 6 months plus 6 months, 1 year. So if it is, that depends on what the crop is. The concept once more I'll explain. For an agricultural advance, first see whether it is a long duration or a short duration. If it is a short duration crop, then you have to, if it is overdue for 2 crop seasons, it will be NPA. If it is a long duration crop, if it is overdue for 1 crop season, then NPO. But I do crop season, one very, very important practical thing is agricultural loan. Often it is given as an agricultural loan, not utilized for the purpose. Very, very important thing. When you're doing a branch audit, especially, please look into this. An agricultural loan often is given as a normal loan. I'm sorry, it is given as an agricultural loan, but not utilized for the purpose of agriculture. This is something which is very, very important. How do you verify this? See, even though it may be 2 crop seasons or 3 crop seasons, periodically you should be having remittances. We crop loan periodically also remittances should come. So to that extent, if you find that in agricultural loans there are no repayments consistently or there are long gaps, kindly ensure, especially if the amount involved is large, please ensure that it is genuinely for the purpose. For that, all you need to do is check with the branch manager, get an explanation why periodic remittances are not happening. Ensure, especially if it's a major facility about exceeding 50 lakhs and all that, please ensure that the branch manager has some system to verify that the purpose is actually for this. Credit card is also 90 days.
One more thing, who is fixing this crop season and who is fixing this? The bank
SLBC,
manager,
state level banking committee. SLBC.
So they have this circular, right? The bank.
They do. The branch manager in the sanction letter itself, that duration will be clearly fixed. But it is fixed by SLBC or so it is different for various states, sir.
Different to different crops also, right?
Obviously. Different for different.
If it's a coconut, so this is the crop season, you have to give it.
Absolutely. Every crop, every state separately. State level, it is fixed.
Okay. So whether it is a long duration or short duration, also that is fixed by the state level banking committee.
Absolutely. More than 1 year will be long duration, less than that will be short duration.
Okay, right. Okay. Thank you.
Thank you, sir. So out of all this, I've missed one facility. What is that? I've not explained the NPA norms relating to one facility. What will that be? Term loan I've covered, ODCC I've covered, bill purchase, agricultural credit card I've covered. What else is there? There is one thing which we missed out. So I cut to the chase and said bills purchase and bills discounted. But what about the one before that? A pre-shipment facility, packing credit. Now this is a very complicated thing. Complicated as in, complicated with respect to the way it is operated. And often you will find a lot of cases of divergences. A packing credit, as I said, is a working capital is given for procuring raw materials for other working capital requirements so that you can manufacture something. That is a pre-shipment facility. For this, however, there is a longer period. And that it depends on the bank's delegation of authority. Branch often can give up to 365 days, depending on the bank. Up to 365 days, the bank itself can give. And normally, after that only will be NPA. So typically, if I'm to summarize, 365 plus 90 days. Normally, after 450 days from the due date only, the account will turn NPA in the case of pre-shipment facility, provided the reason for extension is clear. That means, what does this mean? I've given a pre-shipment facility. The borrower has not made the shipment. Because if the borrower has made the shipment, the pre-shipment will become post-shipment. But pre-shipment mari bills purchased. This has not happened. In that case, we have to, so this is one case which we have to ensure that evergreening is not happening. Pre-shipment mari evergreening. So what we should see here is, we should get a breakup of the bills purchase facility, ensure that the due date is met. If the due date is not met, kindly see that for the revised due dates, the approvals are in place. If the approvals are not in place, then the account will turn NPA within 90 days from the due date. I hope that's clear. We have to check for approvals for extension and packing credit. If that extension is not there, then immediately what was the due date, that will be the due date. If the extension is there, the revised due date will be the due date. From there, we will see 90 days. And within that 90 days, the account will turn NPA. So that is how it will be. So typically you will have a longer period, but please ensure that the extension in pre-shipment is not automatic. There should be valid reasons for that extension. There should be a reason why that shipment could not be made. That should be justified. Right. So this is pre-shipment. So I think I've covered the NPA regulations, IRAC norms as with respect.
I think that non-funded, how we are classifying. No?
The non-funded will not, sir. Non-funded will not turn NPA as it stands. But a non-funded
is not renewed or something like that is coming up.
That also will not turn into NPA because in the NPA loan funded. So there is nothing to classify as NPA.
Then it will become a funded this one, no? If there's a default in meeting this.
That's the point. So I'll tell you. So what happens is, so let us say, this is a common thing. This is a good point, sir. A
contingent liability. No.
It is a contingent liability, Ganesh, sir. But what will happen is, when does an unfunded facility, so if an LC devolves, that is where a contingent liability becomes an actual liability, isn't it? So let's say, so then a bank, let's say a BG is invoked or a LC is devolved. So then what happens? It will be debited either to a current account or to a ODCC account. Correct? Okay. Then again, in that ODCC account or in that current account, you have to check for NP, RBA, IRAC norms. Normal norms. Also, there is ODCC facility. We have to see that. So if a development, let's say it's happening on 20th March, in any case, it'd be okay because you don't have 90 days after that. Okay. So that's the only way. So, but please ensure that if there's a LC development and BG invoked, it is one of the, in our exception reports, it is one of our, for selecting a particular sample, this is one criteria that we ask for. All instances where LC devolved, BG invoked, we ask for a list. For all those instances, we ensure that so this is good that you brought that point, sir. This is something which has to be done.
Okay, right. Thank you.
I think I'm getting some questions also. In LFA, I have to give details of conversion. So that is also there. From an LFAR perspective, any reporting, yes. So in an LFAR perspective, you have to report that. LFAR also, they are asking for instances where LC has been devolved or BG has been invoked. Those are specifically asked for in the this thing as well, in the LFAR reporting as well, which I think would have been covered yesterday. Yes, so these are the parameters for all of this unfunded. So this is how it will become a NPA. This is only how it will become an NPA facility. So I think I've covered the specific principles. Now some cardinal principles that we should all know. One for NPA. One, NPA classification is borrower specific, not loan specific. Please remember that NPA classification is borrower specific and not account specific. So one account of a borrower is NPA. Everything that all the facilities of the borrower will turn NPA. That is the first principle. Account classification is, so for example, a borrower has term loan, ODCC, ODCC, ODCC. One ODCC turns into NPA. All the four facilities become NPA. Will his sister concern also be NPA? No. The sister concern will not be NPA, but whatever is under his name, his PAN will turn into NPA. First point. Whether record, is it rule based or record of record? This thing, it is certainly rule based. It is not security violation based. So often you go to a branch, they will say, technically the account is NPA. He will say, sir, gold under. Gold under. Property under. Property under. Very good property, but please classify it as NPA. In the valuation, you need not classify, give additional provisioning. Okay, so please remember that it is based on what it is rule based. You have to see what it is, and it is based on the recovery of each bank. So one bank is classified as NPA, automatically your account need not be classified as NPA. It is certainly a red flag. Yes, you have to see it indicates that there is this thing, but where a branch, ഒരു ബാങ്കിന്റെ ഒരു ബ്രാഞ്ച് ചെയ്തിട്ടുണ്ടെങ്കിൽ certainly വേറെ ബ്രാഞ്ചും NPA ആക്കണം. Within the bank നോക്കണം, but വേറൊരു ബാങ്കിലാക്കിയോണ്ട് നമ്മളും NPA ആക്കേണ്ട കാര്യമില്ല. So that is another thing. The other principle I'm sure everyone knows is that if it is NPA, what is implication other than provisioning? Your income recognition will be on cash basis. You cannot go by accrual basis. This I'm sure everyone knows. So this is another implication, another cardinal principle here. Next cardinal principle, which I covered a little bit earlier also, year-end regularization and solitary credits. Specifically mentioned in the IRAC circular also, very, very important. Year-end, how it, you have to always see, that is why earlier, which my friend Ajab also was saying, take SMA list as on 1st March. See how it has been regularized. Why? That is a year-end regularization. That regularization should not be out of a fresh facility, should not be out of a check purchased. Often you find that, isn't it? Check medium, check present and vacuum. Correct? Check present, but facility no regularize. You know, that is on the lines of accommodation itself. Very seriously, it has to be reported. So it is extremely important that we see how stressed accounts have been regularized. For that, what should we do? We should do a financial review or an account review. That is for us members. That's where our audit manager strength, our articles also will be extremely handy, because that's why our student strength, they can in depth go into the accounts, see where the source is, and we'll really be relying on them to get into the source of the credits, and that is what is extremely important. So that is my next point. So in fact, before I explain that, I should say that in a bank, in an advance review, there are two stages. In an advance review, there are two stages. First is a file review. That means I take the file and I see what are a lot of relevant papers. I see what are the relevant papers. I see the sanction order. A sanction order gives me an idea of what is the sanction conditions, what is the type. So these are the documents. These are some of the documents which I've written here. So these are all file review. So let us say, I'll give you an example. 10 crores ka term loan is given. In the term loan, I will see the file. What will I see? If it's a term loan, I will see the sanction order. I will see what is a borrower. I will see the financial statements. I will see what is his health. Going concern, is it affected? Audit report, is it qualified? What is his business? These are the things which I'll find out. Bank's internal credit rating, I will see. Is the bank saying LC default? LC is default, VG is invoked. He's a defaulting borrower. Some stay has come against us, some attachment has come to his property, some GST, this thing has come, the major demand has come, some person is some whistleblower letter has come. These things are major things will be reported in one in the file itself. Secondly, internal, external, especially internal credit rating report also, these things will be written, and various other correspondences. So in that sense, a correspondence or the hard copy of the file is a very important document for us. So that is a next document. What else will you be looking into? You'll be looking into insurance papers to ensure that.
ഒരു question ചോദിച്ചോട്ടെ.
Yes, sir.
ഇതിൽ ഈ സിഗ്നേച്ചർ എന്നുള്ള പാർട്ട് എത്രത്തോളം ഇമ്പോർട്ടൻസ് ഉണ്ട്? സ്റ്റാമ്പ് എഗ്രിമെന്റിൽ സ്റ്റാമ്പ് അഫിക്സ് ചെയ്യുന്നത്, അതിനൊക്കെ എത്രത്തോളം ഇമ്പോർട്ടൻസ് ഉണ്ട് നമ്മുടെ സ്റ്റാറ്റ്യൂട്ടിലോട്ട് വരുമ്പോൾ?
സർ, തീർച്ചയായിട്ടും നമുക്ക് ഫ്രം എൻ LFIR പെർസ്പെക്ടീവ് വളരെ ഇമ്പോർട്ടന്റ് ആണ്. LFIR കൂടി ഉള്ളതുകൊണ്ട് നമുക്ക് we have found instances where the loan would have been dispersed year end, but a proper that even the executed documents would not even be properly signed. We had a very serious case, which is a major borrower, where we found that it is a year end disbursement. So we, as you know, visit the branch almost immediately. We asked for the original executed documents, the sanction order original. So what is the executed documents would be the loan agreement, which is countersigned by the bank and by the borrower, the deposit of title deed document, and all other corresponding documentation records. These certainly has to be signed, sir, especially for major fresh advances during the quarter. It has to be signed. As I said, if you find an instance where this signing off is not done properly and the loan has been dispersed hastily without adhering to proper documentation, it certainly has to be commented in the LFIR. Also in the annexure audit report, indicates a very serious flaw in the bank's documentation system and the bank's internal control mechanism. So
ചെറിയ അതർ ഡോക്യുമെന്റ്സ് ഉണ്ടല്ലോ, ഇപ്പം പ്രോ നോട്ട്, അതുപോലെ അങ്ങനെയുള്ള മെയിൻ അല്ലാത്ത ഡോക്യുമെന്റ്സിൽ സിഗ്നേച്ചർ കാര്യങ്ങളൊക്കെ.
So Ganesh sir, അത് നമുക്കൊരു സാമ്പിൾ ബേസിസിൽ നോക്കാൻ പറ്റുള്ളൂ. Beyond a point, it may not be possible. So what we normally see is, so now LFIR also mentions 10 crores or 10%. That is like a minimum that is there. LFIR mentions 10 crores or 10%. So that is one thing that can be done. That is one way, one section of advance which mandatorily which has to be seen. Another is fresh advances. Normally we see around above 5 crores fresh advances during the period. So it falls under one of these two categories. To a certain extent, we'll have to verify that. Largely, we'll be looking at documents like this. Pro note, yes, it has to be seen whether it is there, because now one pro note. Second would be, as I said, all these executive documents, sanction order, the title, your depositive title deeds in a document, a loan agreement. These documents we normally see. Title deed also we ask for. So to ensure that it is there in the with them, safe custody, ensure that also we verify. The sample size can be seen. If there is limitation of time, you can go for fresh advances about 10 crores. It is up to you, because last year to that extent there is a comfort. But certainly 10 crores exceeding fresh advances, 100% has to be looked into. It may not take much time if this is the sample which is fixed. If you have the time, we'll do well to go above 5 crores or 2 crores. Depends on the size of the branches. But yes, sir, it is important. To answer your question, 100% it is important. Depending on the size, at least to some extent, we should verify it to ensure that the system is big, especially because in LFR that question is there, and we have been cast a responsibility to comment on the documentation in the bank.
ഈ 10% ഫണ്ടഡ് നോൺ ഫണ്ടഡ് കൂട്ടിയിട്ടാണ് ടോട്ടൽ.
അതെ 10% ഫണ്ടഡ് മണി. സർ, ഇത് ഒരു ഓവറോൾ ബെഞ്ച് മാർക്ക് ആണ്. ദിസ് ഇസ് സ്പെസിഫൈഡ് ഫോർ ലാർജ് ബാങ്ക്സ് ഓൾസോ. ലാർജ് ബ്രാഞ്ച് എത്രയാണ് പണ്ട് 100 കോടിയെ സ്പെസിഫൈ ചെയ്തിരുന്നത്, ഇപ്പൊ സ്പെസിഫിക്കലി പറഞ്ഞിട്ടില്ല. So this is not clearly spelled out. This is something, this again depends on the concerned signing partner, his judgment. Earlier we used to see 2 crores, 5% or 2 crores. So that limit now has become 10% or 10 crores. That limit is just an indication. It does not say atra nokya madina, and that too they're specifying for large advances, large branches. Large branches not being specified. Earlier large branches used to be 100 crores. അപ്പോൾ നമുക്ക് ഒരു ഐഡിയ കിട്ടും. നമ്മുടെ ഗൈഡൻസ് നോട്ടിലും ഏകദേശം ഇങ്ങനെ തന്നെയാണ് പറഞ്ഞിരിക്കുന്നത്. ഈ 10 crores 10% തന്നെയാണ് പറഞ്ഞിരിക്കുന്നത്. Sampling എങ്ങനെയാണെന്നുള്ളത് is going to be a valid question. എങ്ങനെയാണെന്നുള്ളത് within this time frame, how you're going to verify is certainly going to be a valid thing. But yes, it is both. It is both. You have to see both funded and unfunded, not under 10%.
ചില ബാങ്ക് എക്സൽ ഷീറ്റിൽ തരാൻ ബുദ്ധിമുട്ടുണ്ട്. അത് അങ്ങനെ പ്രശ്നങ്ങളുണ്ടോ? ചില ബാങ്കുകൾ എക്സൽ ഷീറ്റിൽ ഡീറ്റെയിൽസ്, ബോറോവർ ഡീറ്റെയിൽസ് തരാനേ, പിന്നെ ലോൺ ഡീറ്റെയിൽസ് എക്സൽ ഷീറ്റിൽ തരാനേ.
So that I fully agree. That may be an issue actually. Because this 10 what they are likely to say is for 100 crores above branches only this is mandatorily required. You're talking about the annexed or large advances annexed. So what the banks will say is, earlier it was 100 crores, now it is further enhanced. So the large advances, as far as a branch auditor is concerned, for a lot of advances, this issue will not be there, because one central statutory auditor itself may cover the major branches, and below that, for large advances only, large branches above 100 crores may not be too many in number. But if it's there, sir, 100% correct. Even as central statutory auditors also, often we have that issue, branches not giving that on time. So it has to be obtained. Unfortunately, that is a requirement. And as a branch auditor, if you are doing a large branch, you have to necessarily furnish details exceeding 10% or 10 crores and submit it to the central statutory auditor. So they are optional. Yeah, we have practically that issue we have faced, but we have to fight around and get that information. Kore CBS no information വരുന്നുണ്ട് കേട്ടോ sir. അവർ കുറെ ഇപ്പം 10-40 items they are trying to take that through CBS. So that, for example, insurance not renewed, all these cases they will get it from CBS itself. So those annexures to LFR, most of these banks are now automating so that it can be just taken from the system and customized reports are provided. Most of the banks it is there.
Okay.
So anyway, so to that extent, in the LFR, that requirement certainly is there. It is something which you have to insist for. But again, I'm saying it is for large branches, and what is large branch is not defined. So to be safe, you have to go by earlier definition stating it is 100 crores. Till further clarification is there. Anything further, sir? Anything further to add? Right, sir. So with your permission, I'll continue. If there's anything, please interrupt me again. So this part we have covered. So first part is the file review. So file review will contain all these papers that you have to see. This is one aspect. The second aspect is account review. Now, account review is through, that's where I said again, we will require the help of our article assistants, our audit managers and all of that to do the account review. Now, account review is happens through Finacle, as you're aware, or Finacle or whatever CBS that they have. So this, I'll just quickly touch upon this, and this is extremely important to understand or to classify an account which is otherwise classified as a performing. See, all that we discussed about year-end credits regularization. What is the fundamental logic? The fundamental logic is understanding the source of credit. The source of credit has to be genuine. What is genuine? Genuine means XYZ bank should not give another facility to regularize the existing facility. For example, SMA 2 account is overdue. From December onwards, it is overdue. What will they do? On 31st March or 30th March, they will give a fresh facility and then regularize the existing loan. This is called evergreening. It is taken extremely seriously by RBI, by the regulator as well. So we cannot have an instance where a fresh facility is given to furnish, to regularize an existing facility. It may not be as simple as this. So when you instruct your article assistants, what we should tell them is understand the source of credit. Source of credit. The fourth question is most important. Source of credit, source of credit, source of credits. Normal course, if the account is NPA, the Finacle system or CBS system itself will capture that. So that our role is to that extent limited. But now what will happen? That source of credit, how it has been regularized, that Finacle or CBS cannot see. For that, you have to go to the source of credit. What is source of credit? I will tell you with an example. We had a particular branch audit. It was in Delhi. We were doing the branch audit. We saw that in that particular branch of that bank, it was a very weak account. Then it was called probable NPA and all that. In that probable NPA account, we found that year-end regularization has happened. How it has been regularized? Some funds have come from another borrower. Some funds have come from another borrower. That borrower was not in this branch. It was in a different branch of the same bank. It was in a different branch of the same bank. In turn, we saw those, in fact, it's not come from one account, but it's come from 3 accounts. Into this account, from 3 different accounts, credits have come in to regularize this. So again, to emphasize this, this credit has not come from this branch, but from another branch of the same bank. And not just from one borrower, from 3 borrowers, this amount has come. So then what we saw? Again, we saw in those 3 credits, how the credit has come. We finally saw that the ultimate source of all this is a fresh term loan which has been given. I'm sorry, I'm brushing through a lot of these things. I wanted to take this particular thing. We were doing branch X. Branch A is the borrower A we were verifying. In branch Y of the same bank, we found that there were other facilities which were given. So B, C, D, these B, C, D were all sister concerns of A. Then what happened? To service C, another fresh loan has come. That loan has gone to, that fresh loan is, let us call that loan E. That E is the fresh general purpose loan that has come. That has gone, that fresh loan has been given to C. Using that C, B has been serviced, D has been serviced, A has been serviced. Everything we found out sitting there in a matter of 5 to 10 minutes, we were able to find out this entire thing. We approached the branch manager, asked him, why is this E given? E is the fresh general purpose loan. It is given as a general purpose loan. Immediately it fell flat. We recommended it for classification. So just see the modus operandi here. In A, from branch Y of the same bank, 3 facilities have come. From that, what have they done? A fresh facility has gone in to service this. This is what I was trying to say, that looking into the source of credit is extremely important. I hope this point is clear. What did I see? I checked I checked the term loan account, which is SMA. In that term loan, I saw that credits have come. That credit I saw correspondingly debit where it has gone. I took branch Y. I took branch Y in borrower C. I saw that there is a credit which has come. Where is that credit come? In turn, that credit has come through another E is a fresh facility. Using that fresh facility, B, another borrower in branch Y, another borrower D has been serviced. And in our branch, which we are auditing, that also has been serviced. If it's from a different bank, then it is that bank's problem. But if you're doing our own branch, our own bank or branch, say you can't have another amount coming in, because that is clearly an evergreen process. B, C, D, A were all one sister concern group only. So it is not very simple. You can't just see, okay, one additional facility has come to say, it will not be as simple as that. You will find that this routing would have happened. Normally what we instruct our team is, please continue seeing the source of credits till you see an RTGS remittance, the RTGS remittance would have come from some other bank. Or you see an account remittance, you find you find account remittance account pay check remittance, or you find cash being remitted. If it is come from some other account, you have to see that account. In that account, you have to see in turn where the credit sources come. So keep delving into the source of credit. That is how we normally look into it. Any questions on this? I'm talking about how account review has to be done through whatever CBS is there and analyzing the source of credit. So of all the things that we have done, if I am to single out 2 methods by which we have found out max 95% of our NPA cases, one, it will be through drawing power instances. I spoke about how we recompute. Secondly, it has been through account review like this. We find source of credit. There are a lot of stories that we have. I have all these are lot of other stories that have come, practical cases on greening of bank accounts. I have, an umpteen number of instances, all kind of things they have done. What are the instances? They will purchase a check, or they will take a check, they will discount that check discounting they will make. They will take it from fresh facilities. They will route it. We've also had an instance where they overdrew from a particular sister concern in cash and deposited in cash. So all these things we found out, it has all come through Finacle review or CBS review. Through our sitting in our desktop, we were able to find out all of these things. A very smart article assistants or audit manager, we have always relied on them to find out instances like this by going in depth into the source of credits to understand whether there is a year-end regularization happening, which is not acceptable. These are just instances. I just wanted to quickly show you that there are a lot of instances where check purchases there, routed through sister concerns, etc., etc. Ultimately, source of credits we went into and found out there are issues. Long story short, that is what has happened. So these are practical instances. So I've covered basically account review में that there are, one is a file review, another is account review. File, physical hard copy file review, where you have to verify all of these documents to ensure that it is regular, drawing power computation is okay, stock audit report is properly taken, all documents are in place, LC development, BG invocation is not there, things like that. If it is there, how it has been regularized, etc., etc. Then second, and also everything that comes out of LFIR also, it will come out of the file review. Secondly, look into account review. Account review means let the parties account review. You take the party's account in CBS, see the ledger, see how the credit has come. I hope the concept of, I'm getting the point of credit. And I'm saying credit, I'm saying source of credit. Where has the credit come from? Where a facility is regularized, evergreening. That is a concept. Any practical questions, any practical challenges, in anything that we need to discuss further? I hope I'm clear. Then I'll close in another 10 minutes by explaining 2 concepts which are very, very important. One is on DCCO, second is on some COVID circulars, or whatever COVID circulars we have not covered, that also I take. First concept is DCCO. What is DCCO? DCCO means date of commencement of commercial operations. This is applicable for project loans. For project loans, the concept of DCCOs, it is very simple. Let us take a hotel. Hotel, what is commercial operation date? The day on which it starts its operation. Why is this important? A DCCO has to be fixed at the time of giving the loan. A DCCO has to be fixed. The repayment schedule, everything is based on DCCO. This is for, everything is for project loan. Huh? So let's take an example that a project loan is taken for setting up a hotel. They say that after 3 years, you have to start the DCCO. DCCO is after 3 years. Now, if this DCCO is shifted, it can be constituted as a restructuring. That was the earlier this thing. But now they're saying within certain specific things, you can shift the DCCO. That is okay. What are the conditions? That is this I just want to bring about here. If it is an infrastructure loan, up to 2 years from the original DCCO, that means 21st March 2023 was the DCCO. 2 more years you can take. It can be, the DCCO can be extended by another 2 years. Then if it is for reasons beyond the control, then up to 3 years. That means this year, scheduled DCCO date plus 3 years. Now, third one is when it involves court cases, it is scheduled DCCO date plus 4 years you can go. Till such time, that DCCO extension is allowed. Next is, this is for infrastructure. If it is a non-infrastructure loan, then you can go up to 1 year, and otherwise for specified reasons, you can go up to 1 extra year. So totally 2 years. Now, RBI, very important. RBI in its risk-based supervision, it is reported in the guidance note also, commonly found errors. Most divergences found, this has been found as a reason, where extension has happened beyond this time period. I repeat, RBI in its regulatory supervision, very, very serious, has found out that of the commonly found divergences, divergence എന്ന് പറഞ്ഞാൽ bank NPA classify ചെയ്തിട്ടില്ല, RBI ഒന്ന് കണ്ടുപിടിച്ചു. Very serious for the bank as well as for the auditor. Out of the divergence, one major reason that they found out is coming out of this. The extension has happened, but the extension is beyond the permitted allowed time as per RBI regulation. Just ഈ പറഞ്ഞ ഈ ക്രൈറ്റീരിയയിലേക്ക് ഫിറ്റ് ചെയ്യണം. 2 years, 3 years, 4 years, 1 year, 2 years, whatever, depending on the class of loan, depending on the reason behind that. So this is one very, very important thing which, dear sirs, you have to look into and ensure that the DCCO is correct. The DCCO again is date of commencement of commercial operations. That is specified for every project loan so that they will commence the operation even if the repayment is regular, but this extension is given beyond the regular stipulated deadline. The account will still be classified as a NPA. Is a very important aspect, irrespective of the repayment schedule, if the extension is beyond these stipulated conditions. Any questions on this? Any further questions on this?
Sir.
Yes.
Sir. The extension cannot be further extended, right? Another is in project loans, the money has to come from the project only. You cannot bring in some other pump in some other funds and get it regularized. Am I right?
Which is the logic behind giving this extension? Even if the regularization, if the funds are coming in.
I have not commenced the operation, but I am regular. Still, it will be NPA. Am I right?
Correct. If this extension is
not commenced, but he is paying out of his personal funds.
Correct.
Okay.
Correct. So then, that
money has to come from the project itself. Yes.
Exactly. That is the logic behind this. As regards multiple extensions, yes, sorry.
Yeah, the logic is.
Yes, sir.
Am I clear?
Yes,
the project,
yes, sir. Absolutely.
Project has to generate funds and it has to be repaid.
Absolutely. Which is why I said irrespective of the repayment.
Yeah,
yes,
thank you.
Yes, sir. So then one more aspect here, multiple extensions actually, yes, within the timelines that there are, in some cases, banks have obtained opinions also. Typically, this thing is within that date. As long as it is within that date, that extension is. In certain banks have seen them having obtained some opinions also in this regard, that is possible. Right. So then I'll move on to the next one, and this is the another aspect is the COVID-related circulars. So I'll just explain that. There are two major circulars that have come in as a result of COVID. One is the MSME circular. Now, MSME circular, last 5 minutes, so I know I'm overstepping my time slightly, but I'll just quickly take you through two important circulars. First circular is on MSME. So almost all of us are going to be having this issue, especially now because NPA has been restored. A classification has been restored. So we have to very, very tightly see whether this is there. Most of the branches, we may find that one of these two restructuring norms have been brought in. Because now moratorium after 31st August is not there. So what do you do after that? Many branches would have done this. So let us quickly discuss two very important circulars which have come. First is on restructuring of MSME. This restructuring of MSME, multiple variations of that MSME. Now in COVID light also they brought it here. So quickly if I am to explain the conditions here quickly. One, MSME less than 25 crores only is eligible for restructuring as MSME. MSME who has borrowings not exceeding 25 crores only will be eligible. Very important is that you should take funded and non-funded. One. Secondly, not just with that bank, but with all banks and NBFCs. ABC borrower has 20 crores with us. 5 crores with another bank means totally he has exceeded 25 crores. So he will not be eligible for restructuring under this scheme. There is another scheme for him, but not under this scheme. He cannot avail restructuring under MSME circular. Second, he should be a standard asset. He should be a standard asset. However, there is a finer twist to this. This standard asset, though it should be a standard asset, it should not be a SMA 1 or a SMA 2. So it should not be a SMA 1 or a SMA 2. The borrower's facility should be standard. It should not be SMA 1 or SMA 2. What is it? What are they stipulated? They have stated default indayal more than 30 days more default in Amadlia. So that is what is mentioned here. Then another aspect is restructure should be implemented by March 31, 2021. Next is GST registered entity. So GST registered entity you cannot give them the benefit of the MSME circular. Now, one important aspect here is, though if they are exempt from GST registration, then it's okay. You can still go by that. Now, if this is the case, what is the benefit? If it is restructured, normal course of the principle is you restructure an account, it has to be classified. But if it is as per satisfying these conditions, then standard asset classification can be retained. Next is additional provision of 5% will be required. Now, I hope this is clear. For students, once again, what is restructuring? Restructuring, I give a loan, but I'm changing the terms eventually. Restructuring means I'm giving a loan, but I'm changing the terms. If I'm changing the terms, then it is called restructuring. What happens if I'm restructuring? Immediately the account will become NPA. Loan 31st March due NPA വേഗം ലോണിൽ റീസ്ട്രക്ചർ ചെയ്ത ടൈം കൊടുക്കുക. അങ്ങനെ ചെയ്യാൻ പറ്റില്ല എന്നുള്ളതുകൊണ്ടാണ് റീസ്ട്രക്ചറിങ് നോംസ് വന്നിരിക്കുന്നത്. അപ്പോൾ generally the principle is if an account is restructured, the account will become NPA. The exceptions are specific exceptions given, like this MSME circular. So I should have started with that. That in that light, this COVID MSME circular is very, very important. So these are the conditions that.
മൂന്നാമത്തെ പോയിന്റ് ഒന്നുകൂടി പറയാം. Restructuring of borrower account is implemented by March 31st.
ഞാൻ അത് ഇതിൽ പറഞ്ഞുതരാം. ഇംപ്ലിമെന്റേഷൻ എന്താണെന്നുള്ളതിന് അടുത്തോടെ വെച്ച് പറയാം. ഇംപ്ലിമെന്റേഷൻ എന്ന് പറഞ്ഞാൽ അത് കംപ്ലീറ്റ് ചെയ്യണം. അതായത് ഡോക്യുമെന്റേഷൻ ഫുള്ള് കംപ്ലീറ്റ് ചെയ്യണം. എന്നിട്ട് സിസ്റ്റത്തിൽ അതിന് ചേഞ്ച് കൊണ്ടുവരണം.
റീസ്ട്രക്ചറിംഗ് പ്രൊസീജിയർ ഇത് കംപ്ലീറ്റ് ചെയ്യണം.
അതെ അതെ. ഞാനിപ്പോ ഇതോടെ വരുമ്പോൾ സാർ ഒന്നുകൂടി ഞാൻ പറഞ്ഞുതരാം. പേഴ്സണൽ ലോൺസിന്റെ കേസിൽ ഒന്നുകൂടി ക്ലിയർ ആവും. ഇതിപ്പോ this is one circular. This is the MSME circular. MSME circular, most of our members will be probably conversant with this because this was there earlier also. Not the similar circulars were there earlier also. They've been given extensions in a way. The last one is this Feb 2020 extension which has come. Feb 2020, you would have last audit also, probably you would have seen this. Now, other than this, these are the recent circulars. This is a very important August circular which has come. The August circular is a very important circular because now you will find that this last minute rush also, especially since this has come even the last few days, you may find certain instances, in which case this is very, very important because these last few days you cannot do it. Why? I'll tell you. So here again, eligible borrowers, it should be standard, but not in default for more than 30 days. As SMA 1 hour, SMA 2 hour. I'm sorry, but one thing I overstepped. In fact, this condition is not there for the earlier MSME. It is there for only this personal loan. The second circular is SMA 1, 2 barane. Mattele standard ne parayunnallu. In personal loans, SMA 1
it should be standard on 1st March 2020, no?
Correct, sir. Idile standard asset March 1st 2020 parayana. 2021 alla. To be eligible under this.
31st March it is a substandard or something like that. Then it's a gone, no? 31st March 2020.
You can't take this. So by idinte logic endha ariyo? Idu COVID circular aanu. COVID on Marchilille.
Okay, fine.
That is the logic here. This is a COVID regulation.
Okay, fine.
So COVID, if it is SMA 1 or SMA 2, so that is the importance of this. The earlier condition SMA 1, 2 actually that time I stand corrected. Earlier MSME circular this is a specific COVID circular.
So it is basically beneficial to the borrower, right? If it is giving less time, less than 30 days now.
Correct. So what they're trying to say is, if he's even at March 1, 2020, also if he was a defaulting person, up to 30 days default, but he's a perpetual defaulter. എന്നുണ്ടെങ്കിൽ കോവിഡ് സർക്കുലർ എന്ന് പറഞ്ഞ റീസ്ട്രക്ചർ ചെയ്യാൻ പാടില്ല സർ. അതാണ്
മാർച്ച് 31 സബ്സ്റ്റാൻഡേർഡ് MBA ആയിരിക്കും. ബട്ട് മാർച്ച് 1 മേ ബി സ്റ്റാൻഡേർഡ്.
അല്ല സാറേ, ഞാൻ പറയാം. നോ, വൈ? ബിക്കോസ് ദേ സേയിങ് SMA 1. അങ്ങനെ മാർച്ച് 31 ആണെങ്കിൽ അയാൾ SMA 1 or 2 ആയിരിക്കില്ല. ഇത് SMA 1 or 2 പോലും ആവരുത്. അതായത് SMA 0 ആയാൽ മാത്രമേ കുഴപ്പമില്ലാത്തതുള്ളൂ. SMA 1, 2 ആയാൽ പോലും it is not acceptable. SMA 1, 2 എന്ന് പറഞ്ഞാൽ 30 to 60, 2 എന്ന് പറഞ്ഞാൽ 60 to 90. NPA എന്ന് പറഞ്ഞാൽ
if it is a standard on 1st March, then why it have to come to substandard on 31st March?
മനസ്സിലായില്ലേ സർ? അതായത്
if it is standard on 1st March to 2020, then now he will become a substandard or SMA 2 in 31st March.
ആവില്ല. What are they saying? ആവില്ല. നമ്മൾ ഇതിനെ കണ്ടീഷൻ ആയിട്ട് what are they saying? They saying your condition should be as of March 1, 2020, you should see whether this borrower is affected due to COVID. Adinu what are they saying? You should not be a defaulting. So he should not be a substandard account. He should not be SMA 1 account. He should not be SMA 2 account. If he's one of these conditions, as you rightly said, sir, നേരത്തെ പറഞ്ഞ പോലെ ഇത് കാരണം കോവിഡിന്റെ സർക്കുലറിന്റെ പേര് പറഞ്ഞിട്ട് ഇതിനെ കൊണ്ട് റെഗുലറൈസ് ചെയ്യാൻ പാടില്ല. That is the logic. അപ്പൊ സബ്സ്റ്റാൻഡേർഡിന് കിട്ടില്ല, SMA 1 കിട്ടില്ല, SMA 2 കിട്ടില്ല. SMA 0 and ബാക്കി സബ്സ്റ്റാൻഡേർഡ് ആസിഡ് മാർച്ച് 2020 മാത്രമേ ഇത് അവൈൽ ചെയ്യാൻ പറ്റുള്ളൂ. രണ്ടാമത്തെ, the resolution framework should be invoked before December 31st, 2020 and should be implemented before 31st March 2021. Resolution should be invoked before 31st March 2020, implemented before 31st March 2021. സർ, ഇതില് ഇൻവോക്ഡ് എന്താ, ഇംപ്ലിമെന്റഡ് എന്താ? ഇൻവോക്ഡ് എന്ന് പറഞ്ഞാൽ മ്യൂച്വലി എഗ്രി ചെയ്യണം, ബോറോവർ റിക്വസ്റ്റ് ചെയ്യണം, ബാങ്ക് എഗ്രി ചെയ്യണം. This documented ആയിട്ട് we should see before 31st March 2020 that this is on record. So this is the first condition. Implemented. What is implemented? Implemented 3 conditions are specified. One, they saying
moratorium accept ചെയ്യുന്ന കേസാണ് സർ പറഞ്ഞത്.
അല്ല സാർ, ഇത് കോവിഡ് റീസ്ട്രക്ചറിംഗ് സർക്കുലർ ആണ്. ഇത് റീസ്ട്രക്ചറിംഗ്, ഇത് കോവിഡ് സർക്കുലർ. ഇത് once more I'm explaining, this is not moratorium. Moratorium is over. August 31st August 2020, all moratorium circulars have been the period is over. Supreme Court has not allowed any further extension by today's order. So we are not talking about moratorium circulars. These are restructuring circulars. We are talking about COVID restructuring circulars. COVID in a normal moratorium circular timeline cover ചെയ്താണ്. നമുക്ക് ഈ ഓഡിറ്റിൽ വലിയ റെലവൻസ് ഇല്ല 31st ഓഗസ്റ്റിന് ശേഷം. ഇതിന്റെ റെലവൻസ് ഉണ്ട്. അപ്പൊ റീസ്ട്രക്ചറിംഗ് ഇല്ല, പേഴ്സണൽ ലോൺസ് സാർ പറയുന്നത്. അപ്പൊ റീസ്ട്രക്ചറിംഗ് ഇപ്പൊ ഈ രണ്ടാമത്തെ ക്രൈറ്റീരിയയിൽ പേഴ്സണൽ ലോൺസിന് ഒരു ഫ്രെയിം വർക്ക് ഉണ്ട്, അതർ ദൻ പേഴ്സണൽ ലോൺസിന് ഫ്രെയിം വർക്ക് ഉണ്ട്. അതിൽ പേഴ്സണൽ ലോൺസിന് ഫ്രെയിം വർക്ക് ആണ് ഇപ്പൊ പറയുന്നത്. What is implemented? Implemented means 2 things are specified. First thing is 3 things are specified. One, they're saying that you should implement it by completing documentation. Everything should be signed off. Documentation should be completed. Secondly, in the CBS also it should be given effect to. The restructuring effect should be brought about in CBS. Third thing is, as per the revised terms, he should not be a defaulter. Very important. As per the revised terms also, he should not be a defaulter. If these conditions are satisfied, then we can say implementation is done. Implementation should be done before 31st March 2021. This is eligible for, this is applicable for personal loans. So when we are doing our branch audits, as a branch auditor, very, very important that we understand this. If I'm to quickly summarize, we are checking whether this is a proper restructuring. These conditions have to be satisfied. First condition is on whether he's a SMA 0 or a standard account. If he is, then he's eligible. The resolution should be invoked. Invoked means both the borrower and the party should agree to this in writing. And it should be implemented. That date is, you should get a letter before 31st December 2020. You should see that it is there. Both the bank and the borrower should sign off and agree to that. Next, it should be implemented before 31st March 2021. That means these 3 things: implemented in CBS, signed off, documentation complete. It should be regular as per the terms. It should not be irregular. It should be correct. And then it is implemented. Then it is a proper regularization.
So what is meaning regular then?
So regular means ipo ee pudhiya condition nokkumbodum again adayathu defaults undavarudha. Ipo ee restructuring vannu kayina pudhiya terms prakaram reschedule cheyidu kodukkullo. ആ റീഷെഡ്യൂൾ ടേംസ് പ്രകാരം ഇനി ഡിഫോൾട്ട് ആവരുതെന്നാണ്.
NBA ആവുന്നത് ഉദ്ദേശിക്കുന്നത്?
അല്ല, ഡിഫോൾട്ടിൽ ആവുന്നില്ല. ഡിഫോൾട്ട് എന്നാ സാറ് പറയണേ. ഷുഡ് നോട്ട് ബി ഇൻ ഡിഫോൾട്ട് എന്നാ പറയണേ.
Okay.
That's the normal cost because other restructuring terms moratorium default so then structure.
Okay, fine.
Sure, sir. This is the first thing, and then obviously the moratorium should not exceed 2 years. So that also as part of the conditions, please check that. Please put out this.
Sir,
one down because sir, December implementation.
Concurrent audit note others concurrent auditors
as part of central statutory audit in branches where we've seen a lot of branches where this is done. Typically not just here. Typically we find that across industry, a lot of cases of this has been there. RBI also, I think certain clarifications of they've been specifically as instructions to auditors also, they specifically asked us to ensure that the restructuring is proper. It is because of COVID, to ensure that the default is because of COVID and all that. And that it is not, it is not a, evergreening exercise. So this is a personal loan. However, sir, one main point is as part of restructuring, they are not allowing fresh advances here in personal loans. In the second category, they're allowing, but in personal loans, they are not allowing fresh advances as part of restructuring package. In personal loans. Now this is restructuring norms under COVID for personal loans. Second part also, I would like to quickly take.
So what is the difference review and restructure?
Review nor word, sir, review no in the context as
No, there is some banks are restructuring the same pattern of the restructuring. They are NBA class period loans converted into class
review. Yes, I review the concept. Review and the it is called a short review. Normally that is done in a ODCC facility. The qualitative particulars that we mentioned, the stock statements not being submitted more than 6 months or DP not submitted. That is a technical anomaly. That if it is renewed, then it can be regularized. For that, they do a review process.
It can be do only for the CC and OD limit.
For example, exactly. Typically review or maybe even yes, typically for a CC or OD or a working capital demand loan possible. Term loan review not a concept because review if there is an overdue with there are areas, you cannot review and regularize it. But for a ODCC facility, it is overdue for renewal. Then you can do a short review. So review means you're not renewing because some documents have not been obtained. You're only doing a short review after obtaining approvals. That is the concept.
Okay.
That is review. And restructuring. Restructuring means you're changing the terms. You're changing, you're changing the terms of repayment. You're giving fresh facility. All of those things would form under that. But personal loan, you cannot give a fresh facility. That is what I was trying to say. Now, circular.
Sir, if the annual renewal is pending, for want of certain papers, and when that loan is becoming NPA, if it is not renewed, for that purpose, review is done. Short review is done for that purpose.
Exactly. That is called a review.
Yes, sir.
Yes, sir. That is called a review. Normally, nomenclature review nor a procedure. Reviewed nor a word. If you search in IRCA norms, this is where I remember seeing they are calling it review, and banks call it a short review, but they're doing it for a limited period of time. Right, sir. So, coming back to the point. So, in the August COVID restructuring circular, there are two parts covered. One is for one is for personal loan. Second is other exposure. Other exposure, they are saying either you should remember that MSMEs are not covered in this because MSME below 25 crores is not covered in this because it is covered by the earlier MSME circular. And where a circular into the one either is only for non-MSME or MSME above 25 crores. They can go for this restructuring circular. Even sir, conditions are very similar to the personal loan. The difference in the conditions are because if it is a multiple banking facility, then you should enter into an inter-creditors adjustment. And for this entering into restructuring, minimum 75% of value and 60% in number should agree to a resolution plan. So resolution plan is an important term. Resolution plan is a restructuring plan, resolution plan. So we should ensure that the resolution plan, if it's multiple banking, for such borrowers, resolution plan multiple banking 75% in value and 60% in number should agree to the resolution plan. Next is similar condition invoked, implemented, same condition of the earlier one is there. However, the second one is implemented within 180 days. 90 alla 180 days. So once it is invoked, you have 180 days for the implementation. Next is inter-creditors arrangement. That agreement should be entered into within 30 days. If it is not, then there are further complications, further provisioning and all will come into play. Now, resolution plan. Now, this is important. Resolution plan may include new credit facility. So here you can give fresh facility. So this, this is very, very important. Probably the last very important point that is going to be discussed in this session. As part of COVID restructuring plan, under other exposure, they can give fresh facility. So RBI also has under various instructions stated that we have to ensure that this is genuinely given as a result of COVID difficulty itself. It should not be evergreening. Fresh facility or the existing facility. Restructuring norms, there is a stipulation that you can give fresh facility. However, that should not be misused. We should ensure that it is tightly seen. We have to ensure that it is a COVID-related stress that is being redressed through this restructuring package, not an evergreening. That is very important. Last is under August 17 circular, they have stated that September, there is a fresh circular stipulating certain ratios which have to be complied with. Those ratios also have to be complied before the COVID restructuring for other exposure, not for personal loans. This is other ratios. March 20 ratios. Angane ratios comply cheyidale restructuring cheyan paadullu ennaanu parayunnathu. I was just trying to elaborate on the COVID restructuring circulars. I hope the concept is clear. Before you verify this, certainly prepare whatever all these has been mentioned in the form of a circular. Please go through the circular, make it a checklist. Ask the branch also the first level to ensure, to give you a filled checklist as to how restructuring conditions as per the circular has been complied. Kindly independently verify. Ensure that it is completely as per this. Ensure it is as per COVID restructuring. Ensure that it is not over evergreening. Ensure that all the conditions have been satisfied to a T. And lastly, ensure that the corresponding 5% provisioning, or in fact, here it is 10% additional provisioning. That also has to be made. So these are the COVID restructuring packages which are applicable. So with that, I close. I'm closing my session. I'm sorry I've overrun it by 20 minutes. But I've covered all that I intended to cover. So thank you so much. I'm so happy to see that we've been able to maintain. I've been looking at the periodically I've been reviewing the number of participants also to try and see whether I should increase, decrease or pace. Till very close, we had around 110, and it's only recently that gradually and still we are at around 75. So I'm so happy to note that you've stayed on, and thank you so much. And before I conclude, I should thank Reggie sir and everyone in the committee for giving me this opportunity. Reggie sir, especially for remembering me. He's doing this after 2 years, but thank you so much. And hopefully next year we can meet in person and have the session, sir. Thank you so much. Thank you so much for your attentive and patient listening. Thank you so much.
Thank you, sir. Thank you so much. It's a very good presentation, sir. A beautiful presentation. Sir, actually, in fact, the number went up to 120 and not 120. It was up to 120.
Is it? Nice to know, sir.
Very good presentation, sir. I have a small doubt. Sir, there will be credit after 31st March. To what extent we can depend on the credit after 31st March in classifying NPA accounts, sir?
Credits after 31st, sir. Yes, sir. So credits after 31st. So here, what we have to remember, we can look into it. But credits after 31st March, what you have to remember is it should not be critical. They should not only service the critical areas. They should completely service all the areas, not just the 90-day norms. So let us put in the two categories: term loans and ODCC. If it is a term loan, so obviously they have not repaid 3 installments. If the account has to be unpaid, March in the matram installment adacha pora. Oh, sorry, December in the matram installment adacha pora. They have to remit up till the last date. They have to remit up till all the areas have to be cleared, including March 31, 2021 should be cleared. Only then the account can be upgraded.
All the pending dues should be cleared.
Absolutely. All the pending dues should be cleared. I was trying for the question mark slide. Any other questions? So that's the first point, sir. So sorry. Second part is if it's a ODCC facility, there you have to be a little more careful because ODCC when do you upgrade a ODCC? There, I would strongly recommend that you see the complete quantitative and qualitative aspects to ensure that the upgradation is genuine. If credits are insufficient, you bring in some credit and then upgrade what I feel. Why? Because credit ODCC is a running account, sir. So in a running account, temporarily they may be bringing some credit and upgrading it. Immediately after we leave, they will upgrade the account. They will withdraw that credit. After exceeding the limit, again they will withdraw. We've seen so many instances of that happening. So if it's a ODCC, please be extremely cautious while upgrading the account. If it is a term loan, if all the all the areas, not just 31st March, but all, not just December 31st, but up till March, all the areas are cleared. One. Secondly, if the areas are cleared through genuine credits, through proper justifiable credits, then we can take that.
Okay. Thank you, sir. Thank you.
In that case, one doubt that
Yes.
see now the NPA classification has to be done automatically by the system, right?
Correct.
So suppose if the account is automatically classified as NPA before 31st March by system, and suppose there is a regularization after 31st March,
Correct.
then that account can only be considered for upgradation only in the next quarter, right?
See,
as at 31st March, can we upgrade it?
We can go in. So here, this is where we have to look into a qualitative aspect. Guidance note also talks about this, that it can be, but we have to be extremely careful when we are doing this. As I said, ODCC, we have to be exceptionally careful and we have to allow for that only under exceptional circumstances. We have to allow for such a upgradation. I would highly discourage that. For a term loan account, what is the logic? Logic is he has cleared all the areas. So there is no point in now classifying immediately upgrading the next quarter. When all the areas, including, so as it, Mr. Going to answer your query, as at April 10th, let's say the regularization is completed, as at April 10th, including March, all dues have been cleared. In which case, it will not be logical to continue. Like guidance note also talks about that possibility, that it can be, but we have to, as you know, we discussed two things. One, it should be, all the areas should be cleared. Very, very important. Not only critical, all areas should be cleared. Anything which is overdue, including March, should be cleared. Secondly, it should be through genuine credits, not through evergreening or fresh facility, etc. These two are, it can be done. Guidance note also talks about it.
Thank you.
Right, so I think we are, if there's anything, any other questions? I think we're good. So I think more or less everyone was interacting in between also. So I think we are done.
You very elaborately covered, sir, everything. Everything you covered very elaborately, and it's very useful. All the what we expected, you covered everything. The COVID circulars, the IR in very detail, the IRCA norms. So it's very useful, and I think there is nothing left.
Thank you so much, sir. Thank you so much.
Definitely, we will have a physical session, sir. Once the COVID is over, we will definitely have a physical session.
Very soon, sir. On bank audit or anything else that you want, let me know.
We will have, sir. We will keep in touch with you.
Thank you, sir. Pleasure to be here. Thank you, sir. Thank you.
Now I request the Secretary Superstar sir to formally propose the vote of thanks. Sir, please.
Chairman of Kannur Branch, Chartered Accountant PJ Reggie, very esteemed member and learned speaker, Chartered Accountant Vivek Sathyan, my dear members and students. Exact 3 years ago, 23rd March 2018, our beloved faculty CA Vivek Sathyan was with us for the seminar on bank audit. I remember there was a physical meeting held at Hotel Malabar Residency, Kannur. It is our happiness of Kannur branch for seeing him again as faculty for today's program. He has got in-depth knowledge on bank audit. Thus, we are fortunate of getting him as faculty for the seminar on bank audit. He presented the paper and led the discussion outstandingly well. We, CA fraternity of Kannur branch, is very grateful to CA Vivek Sathyan for his excellent presentation. Thank you very much, sir. We look ahead your continued support and association with our branch always. I express our sincere thanks to the chairman, CA PJ Reggie, for presiding over the seminar and for the initiative
in organizing this wonderful CPE seminar. I am very pleased to express our sincere gratitude to all the members for their gracious presence and for the active participation. We positively hope all the 3 seminars on bank audit we had will help all the members to carry out the bank audit successfully. Wish you all stress-free and happy bank audit. Thank you once again. I conclude.
Thank you, sir. Thank you once again. We will.
Thank you,
I will keep in touch with you, sir. Sir,
Thank you, sir.
Can
My
you
pleasure.
one small favor, sir? Can you share the back material?
I will, sir. By tomorrow morning, I will, because some of the slides, some confidential things I remember, and I'll certainly share it tomorrow morning.
Please, sir, so that we can share it to our members.
Tomorrow morning, I will, sir.
Thank you, sir. Thank you.
Thank you, sir. Thank you so much. Thank you once again.